connection that powers you.
Discover credit cards automatically double all the cash back you earn at the end of your first year, which means... Wait, hold up. Question for the audio engineer.
Go ahead.
Did I read that right? Discover automatically doubles all your cash back?
Yeah, that's what the script says.
So if I get a Discover card right now, I can earn twice the cash back.
Apparently. Wait! Unlimited first-year cash back match. Only from Discover. See terms and learn more at discover.com/match.
Natalia, solid dismount, but that little pause is a deduction.
Top tumblers hope to stick the landing with Coach Jasmine.
That aerial sequence still needs work.
She needs more certified athletic trainers to find her balance.
Focus. I'm going to need you for the all-around. Wait, who's spotting the vaults?
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. We instantly connect you with quality candidates whose resumes on Indeed match your job description. Visit Indeed.
Officially streaming on this channel and not free from it all. I thought about thanks, Alan. I thought about going on to the free from it all and putting a live stream and just directing people to come here. I don't know.
Welcome back to Squawk on the Street. I'm Dominic Chu. Let's get your reset on where markets are right now. Still in the green.
Let's leave it at this, I guess. I don't really care though. Do it tomorrow. Kind of behind the 8 ball today.
Apple, Microsoft, though, Amazon, and Nvidia all showing solid gains on the day, so keep an eye on mega cap.
I wrote options on this, not realizing it was monthly, so I got out of half of them at a loss and a profit, but it looks like I got out of all of them at a profit because it's still moving up. I was like, ah, shit, six bucks a month from now? I don't know about that. This is going to Fibonacci retrace. It's just bullish as fuck. Bullish as hell right now.
So keep an eye on those Charles Schwab shares, one of the worst performers in the S&P. Keep it right here. We've got more Squawk on the Street coming up after this break.
Regulated activities performed by a licensed
I had no idea I can sell my life insurance policy.
Norman and Nancy Dugan for Coventry Direct.
We were about to let Norman's policy lapse because premiums have become expensive. Our kids are doing well on their own, so we just don't need it anymore.
Then Nancy called Coventry.
They were so helpful, answering all of our questions.
If you're over 65 and have $100,000 or more of life insurance, you may qualify.
After this past year, we're celebrating life. We've booked some long overdue travel, and we're able to pay for our grandkids' college.
Coventry Direct has helped thousands live the life they want to live, pay for unplanned medical expenses, or supplement retirement income. When it comes to selling your life insurance, Coventry's got you covered. Call 800-394-5272 or visit CoventryDirect.com to learn more about how you can get cash by selling your life insurance. 800-394-5272.
I'm Martin Hoke, the inventor of Navage Nasal Care, and I love Navage. I've told you about how your nose is the body's air filter, that Navage's powered suction will help flush out allergens, viruses, mucus, and germs, and that Navage will help you breathe better. But what do other people say about Navage? Like Tara, quote, "My doctor wanted me to do saline rinses for my allergies, but I've never been able to successfully use a neti pot. Navage uses suction power, so it's foolproof. There are nights when I'll have particularly bothersome allergies. I'll bust it out, and the results are immediate. It's such a relief. It's become a lifesaver." Unquote. She's one of over 100,000 online reviews praising Navage, the all-natural solution trusted by over 3 million people to help you breathe better, sleep deeper, snore less, and stay healthier without drugs. Navage is available at Walmart, CVS, Walgreens, Target, Rite Aid, and online. Navage, N-A-V-A-G-E, clean nose, healthy life.
5-star Google reviews are the best reviews any company can get. This drumbeat represents one.
What's up, Frankie?
Many companies have some. And this is how many Search Kings has.
Thoughts on TRKA by now. Everybody's free to do their own. I've done the math. Since the 9 cents, it was 9 cents with 30 million shares. Now it has 330 million. So if you divide by 11, because that's 11 times more shares, you get 0.08 cents a share. So if you want to pay 1 cent or 2 or 5 or 10 or 30, it's worth less than 1 until they, do something. How's the sound here? I screwed up my sound yesterday trying to play around with the settings. I screwed it up. What's up, Solo? Can you guys hit the like button because no one's gonna know I'm even on this channel. This is the first day I'm streaming on the channel. I actually need you to hit the like button. Literally, this is the first live stream of this channel, so no one will know I exist. I got 7 likes. I got 17 watching. So please, 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 just do me a favor. Hit the like. Everybody that's in here, there's 17 of us, 14 of us, I guess. Changes. Much appreciated. What's up, Manuel?
It's beginning to feel as though the risk reward of a tactical bounce higher is increasing. They add while positioning alone isn't reason to be bullish. It does remain light.
I've got 5 months of Discord paid for. Oh, that's what I need to do. Whoops.
That's a bullish reason. What else is driving this rally?
Well, we are already up 5% off of that quick shakeout after the Silicon Valley Bank failure. So I think it's sort of more of the same. What's driving it? There's no doubt semiconductor leadership gives people a little bit of comfort that it's not just pure defense that is working right now. I think there is an argument.
I'm not doing too much today. I'm just watching, waiting. My money's finally moved, but now is not the best time for me to, everything ends tomorrow. I can only get like 2% on options for my strategy I want to try. Like FRC I can, and they changed FRC to 300% on me, so I'm a little choked about that. So what I mean by that is if you go and you look at the short margin requirement. The short $1 you need $3, but that includes puts, even though they're not technically shorting, and selling puts is bullish. So it fucking sucks. And then 2 days is 0.113%. And if you, let's say I wanted to do tomorrow $12, 17 cents, and plus this 17 cents on 12 bucks is like nothing. It's just 0.14. Sorry, 1.4%. 1.4%. 1.46% minus, and just the borrow rate alone. Actually, I don't think borrow rate applies to puts. Never mind. Borrow rate doesn't apply to puts. What the hell am I talking about? I mean, like 1.46%. I'm trying to make 8.6% a week, but they've kind of, like, if you go to next week, good to go. But because of that 300%, not good to go, right? So you go to next week, you're looking at, you're looking at 12. That's $1.10. Divide 12, that's 9.1. But I don't want to be that risky, because I'm thinking 11 is on this one is always the low, right? So, but 11 doesn't quite pay it. 80 cents on 11 is only 7.2. 9.5 92 divide 1150 is 8, so it's not quite there. So, and at that 0.6% actually even makes a difference. You'd be surprised. Bank of America is about to touch 200 EMA. I believe it's going to bounce off of that, so that'd be a good opportunity to go long. He's in the short term.
What sort of risks are lurking here? This doesn't sound like you.
Well, I mean, let's be real. I'm not sure there's a lot of risks. I mean, I think what we're seeing here, I agree with your previous comments, Sarah. The real issue here is the slowdown in lending. I think the Fed answered the bell here, particularly as it relates to what happened with SVB and some of the other banks. Being able to be in a position where you can provide
liquidity. It's in our 401k portfolio. So even though it's like high of the day again, that's like almost irrelevant. It's again, I tried to get people in on this stock 4 days ago. Even if you're late to the party, it's still banging because, and as I've explained, They've pumped Nvidia, they've pumped Meta, they've pumped Google, they've pumped all the tech that they can pump. Apple. They need a new place to pump, and this is going to be it because it's oversold. So. There's a lot of people who got it. You know, I got a couple tips yesterday. One of them was a very nice tip on the week. So I know some people are making some bank on this stock for sure.
And I'm not in those, just to be really clear. I'm on the security side, so I'm just speaking from my own experience.
What I'm trying to do myself. Damn, Evgo, wow. Holy shit. What I'm trying to do is fucking 20 cents now. Yeah, I could have profited pretty well there. Instead of taking a $90 loss, I closed my option out pretty early on this today. I goofed and I thought it was weeklies and it was monthlies, and I don't want to hold it for a month, this stock. But anyways, trying to get 8.6% a week on cash secured puts. So if it goes down, I can switch into a covered call. I mean, I have covered calls on AMC is getting destroyed. I have covered calls on CCL. That's it pretty much right now. So, but again, that was heavily oversold. So, anyone have any like news-based? Yeah, I don't really know anything about it. I think it was an AI stock that was 14 cents that I had mentioned the other day, and I think, unless I'm thinking of a different stock, I think that's an AI play, right? Gold is up.
Maybe like 3-month CDs or 6-month CDs or 1-year CDs. And so if I had any view at all, it would be that I think you'll see more nuanced pricing to attract deposits to match, I'd say, maybe the duration that the bank really wants to see. And that'll be a little more interesting, actually, for depositors, because you'll be able to get maybe differentiated pricing on deposits up and down the short end of the curve between, let's say, 0 years and 2 years. And we haven't had that since the global financial crisis.
It's brutal.
It's been in zero.
There is nothing that is paying anything. Like for safe options, nothing.
So, Jeff, we've been talking about this rally, sort of surprising rally in the face of all these issues. 2% higher for the month on the S&P, 5% for the NASDAQ composite, 7% for the NASDAQ 100. Does it make sense to you, given the intensity of the volatility
It opened
in the bond market
and then
some
dipped.
of the questions this poses for the economy?
Yeah, so I think
It was part of the earnings call out yesterday in the Discord. It was the only stock I chose. There were 734 stocks. I had this week like 20 stocks. That's it. And this was one of them. So, I mean, I'm pretty good at picking ones that I think are gonna have some very good action. This was kind of oversold for what it is. I mean, that's pretty. I didn't expect no 30% move though. But let's be real. But they were, I guess, set up to beat. So set up to beat, you know. 76 RSI though. I don't know about that. Might cool to like 726, 728.
The market is looking for excuses to rally. And I think you're likely to see, even though the Fed is going to continue to talk down inflation, and they will, and that's what you saw sort of with the Yellen speech at Treasury and what you saw with Powell's speech after the 25%.
Switch real quick to. I don't know if I can switch though while I'm live.
But let's be realistic. They're going to be waiting to see exactly how this whole thing plays out. So is the likelihood or probability of a pivot sooner happening? Yeah, the probability increased significantly as a result of what happened earlier this month. And, equities, they're always pricing future cash flows. And so people are sort of getting nervous around the fact that, yeah, we're going to have a recession.
I mean, even the Discord people, I only have 100 and...
for my 3- and 5-year discounted cash flow analysis. houses
Let me-
probably means there's room to
Scored. I only have 164 subs, so I don't know if these people still they're still not subbing to my channel. I don't know why.
In front of it as they can. One last question, Jeff, about Europe. I mean, some of the inflation data we got this morning, particularly Spain, was pretty encouraging. Even Germany to some degree. I just wonder whether or not you think if there is a pivot, do you think it's U.S.-led or Europe-led?
You know, I'm not sure I'm smart enough to know that. You know, I do think they're interlinked, but I think we're you know, and maybe I would have been more confident in years past at giving you that answer because I was a globalist or I understood how global interconnectivity worked. Honestly, we're in the middle of a big deglobalization move, and I think you're going to see central banks act much more, I would say, parochial, right? We're going to be looking at our data here, and maybe the data in Europe.
It's like worst case scenario. I just go with next week's puts. I don't care. Like this week, I mean, I bet you 1250 is pretty safe. Maybe 13. I don't know about 13, but 1250 is probably. I mean, what's 1250 divided 1395? It has to drop by 11% to hit 1250. I mean, that's basically free money. Not like it's a lot, you know. 23 cents on 1250 risk. You know, it's not even 2%, but pays the bills. Pays the bills.
Since like the mid 2000s, and the market's like, wow. So if we really do hit a recession, then the Fed has.
And if you go to next week, so you know, I'd like to see these come back to what they were. Like about you want, you know, for 12 you want $1.20. So for 11 you want $1.10. And I don't think it's even $1. 11. Yeah, it's not even close. Not even close.
I think you mentioned Instacart, Stripe, Epic Games, Fanatics, some of the big ones that you're looking to go public.
1150.
I didn't mention any specific names, just to be really clear. I just said
those are ones that we're all watching.
The market would be more open than it has been.
So this is about 8.2. So that's close actually. If I could get this at what's this? 1150 times 0.86. 0.086. I need this to be like 99 cents. And this one I'd be happy with. 99 cents. 8.6 plus % a week, guys. From where I'm starting with this self-challenge, self-discipline thing. In 52 weeks, that's $2 million. So, and I did a thing yesterday where if you earned 1% a day on $5,000, that was like $300,000. 1% every day. Picked up Evgo call on the live yesterday. Oh, I look forward to the tip, Frankie. Good stuff, man. Good stuff. 6 minutes to close. I would say they did well is a bit of an understatement, bro. They did well. They did. Which did you had at the money? $7? I'm guessing, or I guess it was 6. She had 6. So you had 300%. You paid what, like 20 cents for those things? Oh, what's up, J Stars? Everybody hit that like button. I need you to hit that like button. No one knows this channel exists. So if you hit the like, at least it will potentially move up on the live. Fucking YouTube live. Whatever the hell it is. Oh, I should change this. What is this? Customization. What's that?
SiriusXM is the home for the best in podcasts, like Mea Culpa with Michael Cohen.
I talk to the most brilliant, political, and controversial minds in the world. It's Alan Dershowitz, Andrew Yang, the one and only Henry Winkler, Nicole Wallace, Ellie Honan, the notorious Cenk Uygur. And we dig into the dark underbelly of American politics. This man is still creating chaos that will ultimately dictate the fate of his entire party.
Mea Culpa with Michael Cohen is available now on the SXM app, included with all trials and popular plans.
These days, it's easy to feel stressed about money. Luckily, Experian makes it easier to do something about it with tons of free tools. Check out your FICO score for free. Find new car insurance that could save you $961 a year on average, or a personal loan to consolidate debt payments, or a cashback credit card to keep more money in your pockets. Take control of your finances at Experian.com/save. Results will vary. Savings offers and approvals not guaranteed or available in all states. See website for details.
I'm Howard Mackler of GetRefunds.com. You might have heard me talk about the payroll tax refund for businesses who kept employees on payroll during COVID. But today, I'm not going to do the talking. I'm letting a real Get Refunds client tell you everything.
Hello, I'm Steve, certified arborist and owner of New Century Tree and Lawn. I heard about the payroll tax refund and GetRefunds.com on the radio. When COVID hit my business, we dealt with shutdowns, strict sanitation procedures, and many extra expenses. Since then, we have been affected by product and labor shortages and massive inflation. GetRefunds.com got me approved for the payroll tax refund. With that money, it has allowed me to cover expenses, pay off debt, plan ahead for next year with a positive outlook. If you have a business, you need to go to GetRefunds.com and start your claim now.
GetRefunds.com helped their business, and we can
367%. 376%. Is that all? Is that all, Frankie? Congrats, man. This is a problem with a lot of people in the Discord. You know, I was noticing it yesterday. Oh, when did you call that CCL? Oh, but did you call it out? When Intel? When was that? It's like, it doesn't fucking matter. But for one, you're not paying attention. You're not paying attention. That thing was called out for 4 days. People, they'll like get mad if they don't get in on a play. Or like jealous. Jealous is probably more the better word. They get jealous of others when they don't get in on a play, and it's like, well, I mean, you were told like all day for 2 days.
Saying today, quote, there is material upside for Apple if
Always be in
Disney using shares. And the combination
yeah, I need some mods in case I miss something. Whatever.
The analyst behind that note joins us this morning, Laura Martin of Needham. Laura, it's great to have you back. Welcome. Congratulations on capturing the imagination of the street today. I did wonder, first thing I thought of when I saw the note is, what's Laura up to? You're known for making prescriptions, for example, on Netflix and ads, which eventually happened. What's the motivation for this note?
So I think Apple is really doing a very mediocre job of streaming. They just could connect. They just said they were going to do $1 billion in film financing. That's sort of laughable because these companies they're competing with in content businesses are spending $30 billion a year. Even Netflix, which is a single line business in streaming, is spending $20 billion a year, round numbers. So the notion that Apple's going to spend $2 billion on streaming and $1 billion on films, I think they're starting to get serious because what they're realizing is that services and hardware, which they've done to date, actually do create consumer lock-in, but so does content. And the only content that you don't have to license every time you want to use it is if you own the IP. You own the intellectual property underneath it. And guess what the Walt Disney Company has? 100 years of some of the best intellectual property, characters, and film franchises sort of on Earth. So to own that in perpetuity would actually lower Apple's cost and create more lock-in to their entire bundle of hardware services.
So they're losing Mickey Mouse, fucking Winnie the Pooh, all their original, like Snow White. They're losing everything. Only their new IP they get to keep. And Marvel and all that shit. They're losing a lot of shit. And even Marvel is old, guys. Marvel is like 1940s. So that's coming up. 10 years. Disney's going to get fucked in the future. This chick doesn't seem to realize that.
Is you need teams. And what Disney teams has is a team at Star Wars that doesn't overlap a team at Marvel, that doesn't overlap the team at Pixar, that doesn't overlap the team at Disney Animation, but all of them, those 4 teams, are really great at compelling storytelling. So if you buy the Walt Disney Company, Apple gets 4 storytelling teams with sort of track record second to none.
Why do you think shareholders wouldn't have a problem with the complexity of this deal and the balance sheet dilution that would happen for Apple?
Because I think they should issue shares. So you have Apple trading at 6 times revenue, Disney growing faster, trading at 2 times revenue. The earnings per share would be also anti-dilutive. I think Apple trades at like 10 multiple point premium on a PE basis. So So I think it would be anti-dilutive to Apple shareholders to buy Disney because the shares are so much higher valued. And I would just issue shares. So there's no balance sheet tax on Apple shareholders.
Is there any indication, Laura, that something like this might actually happen? I mean, I know it's fun to speculate.
Some of the issue
and certainly
shares and says
strategic
it's not
value
going to.
for a lot of folks makes sense, but
Maybe.
Apple doesn't do big deals like this.
Absolutely true in the past. You're right about that. Bob Iger was quoted in the past as saying, had Steve Jobs lived, he would have merged with Apple. Because recall, Steve Jobs was on the Disney board and Bob Iger was on the Apple board. So there is a long history of these companies working together. And so even that tells you it made strategic sense back then.
All that said, Laura, what kind of odds would you put on this actually happening, say, in the next 2 years?
I would go 3 to 5. And as the streaming wars heat up, Apple has technology obsolescence risk, right? So one of the things we make the point and note is that Apple put everyone else out of business starting in 2011 as its market share gains went from 4 to 24% of iPhone sales in the fourth quarter of 22, over a decade. Disney's been around 100 years. There will be a point at which Apple is threatened by the next new consumer tech, whether it's the metaverse or goggles or glasses. There are a lot of guys gunning for Apple's smartphone.
So 12's here, I mean, $4
as the next new consumer ecosystem. You know, when Apple decides it feels threatened, the best kind of moat is a content moat.
Yeah. Well, they're definitely second movers, that's for sure. At least history's proven that. Finally, Laura, really quick, just the competitive landscape. I wonder what your latest take is on Netflix and sort of the budding discussion around M&A, whether that's at Paramount or other players too.
Yeah, I think the industry has to consolidate. These losses are enormous. When you combine film studios or film slates, you get to cut out the worst half, and you get to lay off a lot of people.
50's a little sketch for tomorrow, because what's that? What is that?
Netflix with Paramount or WBD, which is Warner Brothers Discovery with
50
Paramount.
divides 13. It hits 1377, so 10%. So if it drops 10% tomorrow, it's cutting it close. It's cutting it close. I don't know if I want to do 10% on that. That is very possible that I could drop 10% in a single day. Like, I don't doubt it at all. I mean,
Up next, Brazil and China inking a
and that's
deal to ditch the
12.50 too.
US dollar. That story
Yeah,
straight
that
out
could easily be 12.50 by tomorrow. 12.85 yesterday, 12.50 the day before.
traffic and margin upside.
In a downtrend, all the big banks downtrend. Is it worth risking for an extra couple cents?
Spring's a time for relaxing.
50 for an extra $100? Not really.
Sunshine. But for new
I don't think so, anyways.
any time of the year is a time for anxiety. Is it the right time to buy?
Yeah, I'm not buying any of those stocks, though. It was nice to see, but I'm not into any of the Chinese stocks. They're always threatening delisting and fucking, what do you call it?
Mortgage loan allows you to save now with a pricing special and down payment options as little as 3 to 5%. Then spring ahead to when rates drop in the future, and you'll even have the opportunity to save when you refinance. So if you're looking for a new home this spring, think about saving with a mortgage loan from SoFi. CNBC Select names SoFi the best lender for
Cents, man. That
saving
dropped a
money
lot
and
today.
relaxing, right?
Just go where?
Visit
7
SoFi.com/spring to learn more. That's
cents.
SoFi.com/SPRING. Mortgages through SoFi Bank. NA member FDIC. NMLS 696891. Loan and offer terms, conditions, restrictions apply. Equal housing lender.
Regulated activities performed by a licensed affiliate.
I had no idea I can sell my life insurance policy.
Norman and Nancy Dugan for Coventry Direct.
We were about to let Norman's policy lapse because premiums have become expensive. Our kids are doing well on their own, so we just don't need it anymore.
I tested it yesterday with some video recordings, but
So helpful,
you
answering
know,
all of our questions.
it might sound different to someone else because it's my own voice. So I'm used to my own voice. You know what I'm saying?
After this past year, we're celebrating life. We've booked some long overdue travel, and we're able to pay for our grandkids' college.
Coventry Direct has helped thousands live the life they want to live, pay for unplanned medical expenses, or supplement retirement income. When it comes to selling your life insurance, Coventry's got you covered. Call 800-394-5272
to Weeble under some stock tickers. I would appreciate that. Rumble calls. Somebody was saying that the other day. Rumble. Where could we put Rumble real quick? Oh, I don't know why I have 2 CCLs going. Let's actually move this to 15. Rumble calls. I mean, it's red today, so.
But what do other people say about Navage? Like Tara, quote, "My doctor wanted me to do saline rinses for my allergies, but I've never been able to successfully."
I'm guessing it's monthly. Oh, it's not monthly. Wow. Okay. This is not bad. 10 cents. 10 cents on 8. 40 cents on 9 for tomorrow. 40 cents on 9. Ugh. AKA risky. 20 cents on 850. 2.3%. Like, that's pretty good. To go to 850 from 908. 7% tomorrow out of nowhere, and I know Kathy Wood is like loading Rumble. I like this. I might sell those. Tomorrow? What is next week on this bad boy? 40 cents on 850.
That we wanted to highlight is China. 3 headlines that kind of tie together here. So first we learned China and Brazil had just made a new trade deal to ditch the U.S. dollar and instead favor their own currencies in global trade transactions. You've also got Russia adopting the Chinese currency as one of its main currencies for international reserve trade agreements and some personal banking services. And then there's also this deal, the Chinese National Oil Company completing its first LNG trade with France's Total Energy.
I might sell some of those.
The Chinese yuan. All of this
I can't imagine it's oh shit.
So you can imagine, Carl, you hear the rising chorus of the dollar's losing its reserve status because we're looking at all these
2 days. A lot can happen, right? Look, that's a bear flag, by the way. 3 down, and then form as a wedge. The bear flag means more downside. Jesus. Monday, this thing was fucking. What's 24th? That's Friday. 27th. Monday, this was 840. Yeah, so $8 is the safest. 850 is actually still quite a bit of a risk, even for tomorrow.
But it's going to take a really long time. The other fact is the U.S. dollar dominates in global.
But that is below 200 EMA.
All the things that make it a reserve currency.
Not too bad.
So there is a lot of fear mongering on this issue, and I just wanted to put some facts behind it. Not to mention the fact that the Chinese currency.
Slim pickings right now, being Thursday, right? Slim ass pickings. So try to just take a look at that. Is the 15.
I agree with you, but wouldn't you argue that their most high-profile visits in the last, say, few weeks, Saudi Arabia and Russia, are at least an attempt to court the petrodollar community, right? 100%. That would be an incremental move.
No, they're making no secret of their goal here, which is to de-dollarize the system from major trade. And that starts and ends with energy, no question about it. And we're watching these deals and we're seeing these incremental moves. I'm just highlighting they are just that. They're incremental, and there's no imminent threat of the dollar losing what is one of our most prized possessions, which is the reserve currency.
King dollar.
Everyone just needs to chill out.
Yeah, exactly. Let's get a news update this morning with Bertha Coombs. Hey, Bertha.
Hey, Carl. Here's what's happening at this hour. A train carrying ethanol derailed and caught fire overnight in Minnesota, prompting evacuation orders for residents living near the crash site. BNSF Railway said around 20.
So we got some Rumble puts for tomorrow.
Minnesota, just over 100 miles west of Minneapolis.
I didn't buy the puts. I sold the puts.
The cause of the derailment is under investigation. House Republicans voting today on a bill aimed at increasing energy production. The Lower Energy Costs Act would increase domestic fossil fuel production and ease permitting restrictions. The GOP says the bill will unleash energy resources. While Democrats say the bill will rewards big oil companies and will contribute greatly to climate change. And Vice President Kamala Harris's trip to Africa continues with a stop in Tanzania. The vice president delivered remarks alongside the country's leader and announced plans to boost trade and investment with the nation. The White House said it would provide over $500 million in assistance in 2024 for the country. Sarah, back over to you.
Bertha, thank you. After the break, Barclays chief economist will be here to lay out his case for why rate hikes aren't over, but a credit crunch isn't coming either. Also, Charles Schwab in the spotlight today. Take a look.
That was actually not
saying there's limited visibility on multiple variables. Despite the ratings cut, they keep the
spending. You know that's going to be down. Fucking
from here. Schwab's under some pressure today, but has been an overall gainer.
two Fed will speak. They're speaking. Yeah, shit. So we have some data and some Feds. Is that fucking today? No, that's Friday. Okay.
Beginning tomorrow at 12 p.m. Eastern, join me, Dave LaGreca, and my Hall of Fame co-hosts, Bully Ray and Mark Henry, as we talk to WWE superstars ahead of the biggest wrestling event of the year.
Speaking in like 15 minutes.
Saturday at 3, join us for the Busted Open WrestleMania party at the iconic Whiskey A Go-Go on the Sunset Strip with tons of special guests on SiriusXM Fight Nation Channel 156 and the SXM app.
Discover credit cards automatically double all the cash back you earn at the end of your first year, which means... Wait, hold up. Question for the audio engineer.
It's a bowl.
Did I read that right? Discover automatically doubles all your cash back?
Yeah, that's what the script says.
So if I get a Discover card right now, I can earn twice the cash back.
Apparently.
Just speaking.
Wait. Unlimited first-year cash back match, only from Discover. See terms and learn more at discover.com/match.
Finding great people to hire is like trying to find a needle in a haystack. It's pretty difficult, right? Well, ZipRecruiter has mastered finding a needle in a haystack, so they take it to the next level. They make hiring so simple that it's like finding a needle in a needle stack. And that's why you should try ZipRecruiter for free at ziprecruiter.com/news. Here's what it's like to use ZipRecruiter. They have so many qualified candidates that it's easier to find the right ones for your roles. In fact, 4 out of 5 employers who post on ZipRecruiter get a quality candidate within the first day. That's a lot of news. So how do they do it? ZipRecruiter's powerful technology sends you candidates who are a great match for your job, and you can even invite your top choices to apply. So if you want less hay and more needles, head to ZipRecruiter.
And right now, you can try ZipRecruiter for free. That's right, free at ZipRecruiter.com/news. That's ZipRecruiter.com/NEWS. ZipRecruiter.com/news. ZipRecruiter, the smartest way to hire.
A question from Search Kings. What strategy are you using for your digital advertising? Are you blindfolded, spraying wildly, not knowing what hits and what misses, but paying for all of it anyway? Or the smarter, more profitable Search Kings approach, using measured results, so you always know exactly how much you're paying to make the phone ring and get new customers. You want to stand out where your customers are online? Switch.
Safe, considering we have some data tomorrow. We'll see. Rumble's kind of like what's Netflix doing? I think it's up again, right? Netflix. It's always fucking green. Yeah. It's borderline unstoppable. It's been pumping like all week.
Sector rotation going on today. Now we've been talking about a little bounce in REITs and some of the cyclical names. Look at Vornado. Vornado hit $13 last week. That was the lowest level since 1995. Look, it's bounced back here. Now, admittedly, it was 23 a month ago. Went to 13, now bounced to 15. But very rare you see a REIT leading the S&P up 3.5%. Again, this sector at least has stopped dropping and has modestly moved to the upside. But let me show you some other things here. I've mentioned all of these cyclical names, materials and industrials. There's Freeport-McMoRan's had a very good week overall. It was $35 2 weeks ago. You see that? $40 right now. That's been slowly moving up among the leaders overall in the last couple of weeks. That's certainly a good sign. At the same time, we talked about this bank rally. It's starting to fade a little bit. All of the regional banks have, in the last hour and a half, reversed their gains a little bit. There's M&T Bank. M&T was, moving all week. It went from 114 to 124, as high as 124 today. And you see, all of a sudden, it's starting to fade. This is true of all the regionals, Key Corp, Truist Bank. All of the regional banks have been fading in the last hour or so. That may be a little bit understandable. It's also fading a little bit is a modest rally we've seen in some of the defensive names. For example, Bath and Body Works, for example, Smuckers, some of the just consumer names here that have been generally up for the week. They, too, have been fading here in the middle of the morning. So some very clear signs of the rotation. It is tech holding up. It is REITs bouncing off of the lows, and it is materials and industrials, a lot of cyclical stocks moving here. And again, Carl, sector rotation, very good sign as we close out the quarter. Back to you.
Bob, Sonny, thank you very much. Our next guest argues that the recent financials fallout will cause monetary tightening as central banks raise rates, but doesn't foresee a credit crunch leading to an all-out
Stock up 200% or some bullshit. Yeah, I think I'll short that.
Chief U.S. economist Mark Giannone. Mark, it's great to have you back. Good morning. I know you guys have
Double top at 49. Yeah, no. Security order rejected. Not available to short. Rum calls $10 for 423.
Yeah, good morning, Carl, and thank you very much for having me here. We've seen, of course, the tightening of monetary policy over the past year, but still, despite that, the economy has remained very resilient at the beginning of this year. And as we're looking forward, we have been anticipating for quite some time a recession taking place in the second part of this year. Now, with the increased tightening in lending conditions and credit conditions that's likely going to result from the recent bank turmoil, we anticipate a little more of a slowdown as part of our forecast later this year, but not an outright financial crisis or collapse of
this fucking computer, I have to take it in, guys. It is having some hardcore memory leak problems. I don't know what the fuck it's doing. Like
is that not as much of a concern because it's a small percentage of overall lending, or walk me through why that's navigable?
Fucking thing. Yellen is speaking today as well, apparently.
That's hitting the U.S. economic activity. It's a result of the Fed campaign to raise rate and attempt to slow down the economic activity in order to bring inflation back towards the 2% target. So yes, I do think the market, especially the bond market, is a little optimistic here in terms of rate cut going forward.
We got this final look at Q4 GDP, and some of the consumption revisions were interesting. I wonder whether or not we continue to have this debate about whether the consumer's tapped out on goods, but is going to keep buying services. Is it your sense that what will be resilient and what won't?
It's going to do a rate cut. There's no rate cuts coming. He said it a million times. A million. The fuck is wrong with these people? He doesn't give a shit about the market. The Fed doesn't care. They can buy up assets that they can crash. They have the power to crash assets, and then they can buy them. I don't think he cares if it goes down. Schwab is getting smoked today. It's down 5% now. been alerting that all morning, so you've had a good opportunity to get a lot of this downside.
The inflation pressures are, and a lot of these inflation pressure are fueled as well again by a tight labor market that continues to fuel consumption of a broad set of goods and services, but especially services now.
Right. Well, we'll get a peek on that issue tomorrow, of course, with the data and then the jobs number next week. A lot to absorb. Mark, thanks. Good to see you. Mark Giannone, Barclays.
Thank you, Carl.
A few moments ago, Sam Bankman-Fried left the courthouse in Manhattan, pleading not guilty to new campaign finance and China bribery charges, part of that indictment, of course, that we got earlier in the week.
The charges are just piling up, and these pictures from the courthouse are becoming all too familiar. Of course, he continues to plead not guilty, and trial set for, what, October?
Thank
he
you, guys.
On bail with his parents in their home. Straight ahead on the show, the CEO of Chewy joins us. That stock falling 8% on earnings last week, but investors seem to be using that dip as a buying opportunity, rallying nearly double digits since Monday. Don't go away.
These days, it's easy to feel stressed about money. Luckily, Experian makes it easier to do something about it with tons of free tools. Check out your FICO score for free. Find new car insurance that could save you $961 a year on average, or a personal loan to consolidate debt payments, or a cashback credit card to keep more money in your pockets. Take control of your finances at Experian.com/save. Results will vary. Savings offers and approvals not guaranteed or available in all states. See website for details.
I'm Howard Mackler of GetRefunds.com. You might have heard me talk about the payroll tax refund for businesses who kept employees on payroll during COVID. But today, I'm not going to do the talking. I'm letting a real Get Refunds client tell you everything.
Hello, I'm Steve, certified arborist and owner of New Century Tree and Lawn. I heard about the payroll tax refund and GetRefunds.com on the radio. When COVID hit my business, we dealt with shutdowns, strict sanitation procedures, and many extra expenses.
If it's actually, that's why it's down.
Product and labor
Is the bank.
shortages.
It still has, ain't even close to over. Like, it's still just begun. So,
With that money, it has allowed me to cover expenses, pay off debts, and plan ahead for next year with a positive outlook. If you have a business, you need to go to GetRefunds.com and start your claim now.
GetRefunds.com helped their business, and we can help yours too. Go to GetRefunds.com and see if you qualify in just 8 minutes. GetRefunds.com, powered by Innovation Refunds.
Honey, is our car still under warranty?
No, not anymore.
My sister just got an extended service plan from Ox Car Care.
Ox Car Care?
Yep, Ox will cover our repair bills if anything happens to the car, new brakes, a transmission, AC, or engine problems. Plus, Ox Car Care offers free oil changes, tire rotation, and roadside assistance.
Wait, we pay nothing on repairs? Ox gets it fixed for us? Free oil changes, free tire rotation, and free roadside assistance? Wait, what's the number?
800-695-2073. Ox has a 30-day money-back guarantee and is A+ rated on the Better Business Bureau. They handle their claims from start to finish, unlike the other warranty companies. We should call now. 800-695-2073.
The last thing we need is an unexpected car repair bill. I'm calling Ox Car Care now.
Call Ox Car Care for your free quote. 800-695-2073 or online at oxcarcare.com.
getting smoked all of a sudden. It's going right down. No man's land, right? 30 RSI. We've seen this. We've seen this shit before. Back is below. It did not bounce off of the 200 EMA. Something's up. Something is definitely up here. We got. We broke below here, and Schwab's nowhere near. So something is up.
In the strength here, because it was much better profitability, better growth than expected. What are you seeing in the underlying business right now?
It's nice to be here, Sarah. So we had a tremendous 2022, right? Double-digit growth, we took share, record profitability, free cash flow positive, over $100 million. We're debt-free, and we've guided to continued growth, double-digit next year. Doubling free cash flow, and continuing our path to sustain profitability.
162. Sorry, SI 162. Pac West 950. It's way down. Wall, Western Alliance. It's like the only one that's above 200 EMA right now. Western Alliance.
or the macro, which is continuing to pressure the
Like everything, all these banks are getting fucked. Wells Fargo, what's Wells Fargo? Wells Fargo's on 300, 200 EMA. They're all falling here.
The major points for some of the bears in the short.
MCB.
A modest decline in active customers. On the back of it, Sarah, if you think about it, I mean, we are 21 million or near 21 million active customers playing in a very large market size, 90 million US active households that refresh at a rate of 7 to 9% every year. And we like the pace of our gross ads. And if you recall, you and I have been talking for a while here. If you recall, we took in a large number of active customers during the last 2 years of the pandemic. And, it's just about digesting the math, right? Our churn is materially better than any churn that we've seen at industry levels, and yet a very small degree of churn happening from a large base of a denominator here, takes some time to digest.
Trying to tell us how it was resurging, and I was like, it's not, it's done. The company, it's over. It's over. These two companies, they're gone. Like it's over. It's fucking done. Why people would? They're just getting set up to get smoked. And the one dude, he took his profit. So he said he took his profit, and then he got out. But I don't know if that's true.
And I wonder if you think there was a COVID pet bubble. Is that sort of the way the industry thinks of it?
Yeah, Carl, obviously there were a lot of pets that were adopted during the pandemic. But at the same time, when you look at a company like Chewy, pre-pandemic, if you look at our growth on a year-over-year basis,
50 now? Holy shit. Holy shit. I'm a little
of growth, even pre-pandemic. And so during the peak year of the pandemic, we added an average of $2 billion of growth. So really, when you look at the pop on Chewy,
this is
we got a $500 million pop, right? On a
2 RSI, 25 on Schwab.
And for next year, we've again guided to a growth of somewhere between $1.1, $1.2 billion. And what that tells you is that the underlying resilience of the category, and on top of that, the strength of Chewy, both in terms of acquiring customers but growing share of wallet.
I called it up in the morning. First thing I said, it was 85 RSI, imminent reject. Look, 80, 90. It was fucking 90. Imminent rejection. Like I said, rug pull incoming. I'll pull up the message.
Nearly 21 million pet parents at this point.
I know you've been making that case for a while, Smee, but now there are concerns about the economy and a potential consumer slowdown with all the inflation and the rate shock and these banking issues. So what portion of the business is healthcare and food, which would be more staples, right? And what portion is discretionary? And what are you seeing in terms of consumers' appetite for especially the discretionary items like toys?
I love this question. When you look at our sales, over 80% of our sales are consumables and health. And the consumables and health grew at 400 basis points faster a rate. It grew nearly at 18% relative to the 14% overall growth that we delivered. Secondly, our AutoShip subscription business grew also at an 18% rate, which tells you that customers continue to spend more on the platform. So when we look at the underlying core inputs of the business that signal resilience and future growth orientation,
find it. I can never find it on the.
In terms of discretionary, makes up less than 20% of our spend, and we
okay.
actually reduced.
Here we go. I did find it. I wrote Dow and not DJI. So at 7:34, guys, 4 minutes into the market, I called that.
Household formation, that's currently a little bit subdued.
Where is this?
4
minutes in. So it was 30. It was 32,886.
This year, and yet we're guiding to a double-digit growth year and continuing to take share. So I think, Sarah, when you focus on the fundamentals, we're fairly robust here.
The other knock that I hear is that international expansion, and that's great during good times, but of course,
puts. I know someone made money buying puts on the bank stock. They posted in the game.
On margin growth at a time
that was like basically the bank stocks, right?
And competitors are focusing on expense management and preserving margins.
So long-term profitable growth is our North Star and has continued to be. And what that means is underneath our operating philosophy has been, scale the base cost of the business,
on FRC,
use the savings and reinvest
20%, 13.7 minus point per times 0.8, $11 bucks. So if it fell 20%, it'd be $11 bucks. MCB, why is it down so bad? MCB, commercial bank recognized as number 9 in S&P Global, best performing.
international opens up.
So there's no news on why.
Market TAM for us, and this is our opportunity to
No news on why it's down 20 fucking %. I find that pretty hard to believe.
more or less pet parents are more the same than different
What? How is there no news on a stock that's down 25 fucking %? There's no news on this, guys.
Where we will self-fund a bunch of this growth, and we'll share our results and our approach pretty transparently along the way.
All right, Sumit, thank you for joining us to talk some of the recent concerns and some of the
Short report. Coordinated short attack. Insiders buying, not selling. News after hours, most likely. He's made 900% on his puts. The only stock sold down today is Schwab. The percentage gap is so wide. What? Bullhammer. People are kind of delusional.
Nearly 30% in the last 2 weeks. Don't go anywhere.
Comedy Central Radio brings you the biggest names in comedy. All day long, you'll hear the best stand-up comedy from Comedy Central's
It's on a stock that, for some reason, is down 24%, and no one can understand why. There's no news. What the fuck? MCB, Metropolitan Bank.
Regulated activities performed by a licensed affiliate.
I had no idea I can sell
The
my
hell?
life insurance policy.
Norman and Nancy Dugan for Coventry Direct.
We were about to let Norman's policy lapse because premiums have become expensive. Our kids are doing well on their own, so we
CB,
just don't
latest.
need it anymore.
Then Nancy called Coventry.
They were so helpful, answering all
sad
our
face.
questions.
If you're over 65 and have $100,000 or more of life insurance,
Thank
you may
you. My
qualify.
puts are printing. Accounts above 250K will not be insured. Employee mandatory meeting today. Oh shit.
Thousands live the life they want to live. Pay for unplanned medical expenses.
Not sure how legit that is, but
Selling your life insurance, Coventry's got you covered. Call 800-394-5272 or visit CoventryDirect.com to learn more about how you can get cash by selling your life insurance.
if they're like, yeah, we're gonna lay off people or we're getting bought out, well, you know, that could be like 50% haircut.
And I love Navage. I've told you about how your nose is the body's air filter, that Navage's powered suction will help flush out allergens, viruses, mucus, and germs, and that Navage will help you breathe better. But what do other people say about Navage? Like Josh,
I mean, it's kind of sketch because puts on it are not cheap. They're very, like, holy fuck, right now, guys, you could sell April 21 puts for 50% downside for 360. 50%! 360! All strikes. I can sell next month 35 cents on 250. I can make 14%. And the stock's $28. What? $1.05 divide 5. 21%. 20% on fucking a 5 strike. It's $27. 5 divide 27 is 8. It has to fall by 82%. 82% for you to lose here. What? 10, it's not much more. 165 divided 7. What's going on with this? What's going on with this company? 22 cents. 22% on this one. And like $27. $27? It doesn't even have a 27. There's a 25 that pays $7.10. Pays $7.10 divided 25, 28%. Your downside is $17.90. Downside here is $15.60. What the fuck? Something's going on here. 1 year, 1 day. Okay, it hit $13.98 on that 1 day. and it was worth 115. I almost want to do it. I almost want to do it. That is insane. 35 cents on a 250 strike. Is it, if it shuts down though, what the hell happens there? Do I just keep the money? Or do they make me buy it at 250 is the question. That's, I mean, that sucks. We're losing a lot of money there. 35 cents. Oh, it just went down. Just went down. It was 35 cents. Fuck. Like 5 is great. Look how high 5 is. You get 80 cents. 80 cents on 5 is 16%. 16% in a month? That's, you know, that's half as much as I want, but it's virtually free. Stock is $27. Like, you gotta be shitting.
Especially if they take this further. JB, go ahead, sorry.
Oh, yeah, I was just going to say one thing that's interesting is that in addition to managing this district, and yes, there are things like improving infrastructure, which Disney, of course, wants to do, but there are also costs associated with it, and Disney would rather carry the cost of managing its own trash collection.
17,
it's worth it for them to have that kind of control. So
22% on that. 10, 224 divided by 10, 22. 360 divided 1250, 29%, 29%. This pays 29%, and 370 on 15, 25%. Hit 13 something. Fuck. I mean, SBNY was 70, and it went to 16 cents. This is the only thing. I'm not seeing anything saying like
just right, and they're designed by real language teachers, so you learn how to have real world conversations.
Look at the price target. Price target 63. That's January.
After using Babbel, I'm ready to start having real conversations in French.
Yeah, I'm about ready to write these. Like, no jokes.
Or games or videos. You can even join live classes with a language teacher.
If you want to learn a language, there's no faster, easier, better way than
Babbel.
Babbel, évidemment. Go to babbel.com to try for free. That's B-A.
Best performing large community bank.
At Ethos Life, we busted all the myths about getting life insurance. Like myth number 1.
Life insurance? I can't afford that.
At Ethos, we have term life policies everyone can afford, with policies as low as $7 a month. Or myth number 2.
I have a life insurance policy.
Yeah, and now it's up 25.
With workplace coverage usually only equal
something's going on here.
That won't nearly be enough to cover your family's ongoing and future expenses. A long-term, affordable policy from Ethos can give you the peace of mind that if something happens to you, your family is well covered for years to come. Myth number 3.
Getting life insurance? It's just too complicated.
At Ethos, our 100% hassle-free online process can give you a quote in seconds, application in minutes, and coverage in hours. With no medical exams or blood work needed. Just answer a few health questions. Get your free online estimate at ethoslife.com. That's ETHOS life.com. Rates will vary based on age, underwriting, face amount, and type of policy.
Hello, I'm Ryan.
And I'm Catherine.
We're part of the BlendJet team.
And husband and wife. If you're one of the 5 million people who use a BlendJet portable blender, thank you.
A few years ago, I had a freak accident and almost died. Daily smoothies have helped me recover.
7. You can just do a few strikes.
Live healthier lives by making it easy to enjoy perfectly blended smoothies and protein shakes anytime, anywhere.
The BlendJet 2 portable blender is powerful.
Sense.
USB rechargeable.
This is actually the bid ask isn't even anywhere near it. Bid ask is only 95 and $1. Last, it's saying last was 95. Yeah, so this is not exactly accurate. That's 20%. This means I don't have to work. 1.7. Oh, sorry, divide 1750. Divide 750. 23%.
Long-term partnership. Financial terms not provided, but we are told it's performance-based.
Curry down here, but I mean, virtually fucking free.
Has done 10 signature shoes with UA. As part of this new deal, he's going to be named president of the Curry brand, and he's going to go beyond working on just basketball and golf. delve into new categories, including women and youth. He'll also be tasked with helping to recruit other athletes for the brand. This call is coming as brand new CEO of Under Armour, Stephanie Linnartz, takes over just a few weeks ago. Under Armour's third quarter footwear sales, just to put it in perspective, Carl, $354 million. Cowen analyst John Kernan says he's doubtful that the Curry business is more than $250 million. And for perspective, Nike's Jordan brand had $5 billion in revenue
they've said that.
so it's still small.
Even the recent one said we're not pausing, and then they hiked 25. Not only did they not pause, they hiked.
Where there are new athletes under that brand and new categories.
Yeah, that's the gold standard. Still is all these years.
Sorry.
Hanging on to gains here.
Well,
40-45. Let's get to
it's not like necessarily a pause if they told you we're only doing one more rate hike. So I don't know what he means. They don't just hike every single time he speaks. That's not how it works. So what they're not going to do, is they're not going to do any cuts. They are not necessarily, like, they already have intended to not do another hike for a little bit, but they still have one or more hikes coming. So, I mean, I don't know. You'll have to kind of take that. You'll have to do with that what you will type thing. And these are looking like free money, guys. Man, the 5 just went down to 75. Come on. No way.
A lot of the positive breadth is happening back in the large caps and mega caps. And I think if we're talking
It's $1.
overall,
Let's go.
I would not say sentiment has improved.
250 was free cash.
Have a new leadership group. It happens to be a very widely owned leadership group, which helps move the chains in terms of the index. But this is really Q's outperforming the S&P. You look at the month of March, 8% versus 2%. That's pretty notable. It is the third month of QQQ outperformance in a row. That is the first repeat monthly outperformance. You have to go back to June through August of 2021. So it's been a while since we've seen this particular group of stocks at the top of the charts. It's nice to see. I think, again, these stocks are owned by everyone, so people are enjoying that. But I would not take that and say, hey, everybody loves stocks again, because I can show you a lot of pockets in the market where you're seeing struggling still for stocks just to tread water.
So what prevents you from being more positive then? From feeling in your own mind that your own sentiment has improved or turned?
Well, I think we've had some major issues with some very large banks. The FDIC is probably the last competent government agency there is. It's non-political. The leadership is not on Twitter. It works as advertised. In 90 years, not a single depositor has lost money when they were insured by the FDIC. And so I think it's been really refreshing to watch them step in, sell one bank, wind down another, and basically shore up the situation. And the fact that that has happened, combined with the fact that we've seen a retracement in interest rates and treasuries, I think has been really helpful. And that pretty much explains why we're at 4,000. Tell me the story of why that would translate into 4,400 or 4,500 anytime soon. I really can't picture it. I don't think we're going to start hearing great things about earnings when the season starts in 10 days or so. And you've already gotten the benefit of easier interest rates.
Sell some of these, because I want to get a piece of some of this while I can. I mean, $250? What are the odds that a stock is $28 and you lose money on a $250, right? Pretty fucking low. It doesn't get a lot safer than that. I mean, that's in terms of safety.
Of late, rather than, getting more bulled up, right?
You should see the look Steph just gave me, but yes, you're accurate.
It is true, though, right?
You're accurate in what you say, because
I mean, incrementally, it's like
50, 38.
Hold on. See, can I fit a paper through that? Barely.
You really should have seen the look that Steph just shot me. It was not a good look. But you're
Cent?
accurate in what you say.
21%? $10?
I have to respect the tightening
21%.
of a credit crunch that
What
is
the
starting
fuck?
to unfold right now. And I also have to take account that this Fed, and I'm going back to last week's move, I really don't think they get what's going on here, and I think they're going to make a bad situation worse. On the flip side, though, Scott, and this is why you're appropriate to just, put your fingers really close together. There is strong economic activity. We know that. There is strong economic activity here in the U.S. And it's not just, the supply chain.
Cents. 30 cents here, 2.75 here. Holy shit. Currently 2.15. So I can imagine if it goes to like 12 bucks, this thing is going to be nuts.
I catch your word, and I agree with the tone and words, and that's where I'm saying I do think sentiment is positive, but boy, is it tenuous, okay? Because if I'm going to say something like right now, we talked about this 2 days ago, Josh was here, cars need to be manufactured right now. They need to be manufactured. We've got 12.2 years is the average age of cars. They're falling apart, and you can see it on the road. Dealer inventories are low. So that needs to happen. It's going to happen, and that's going to inure to the benefit not just of GM and Ford, but the suppliers where
Slept on this. That was bad. Slept on that. These ones are... You see how the volume is, like, massive on these guys? To me, that's telling me something's up. Like, the volume is insane on these. What the fuck? Should I be selling these puts, or should I be buying these puts? Like... something's going on here.
Steph, that there's more reason to be positive than not. I mean, Kramer earlier today said there's not enough right now for the Bears to hang their hat on. Dr. Michael Burry, obviously of Big Short fame, tweets this morning, quote, "I was wrong to say sell." Whenever that last call was within the last few weeks. There it is right here. I was wrong to say sell. Are we wrong to think sell?
No, I mean, look, I think there are a lot of moving parts, Scott, right? And we have been in this trading range for a lot of reasons because there's so many uncertainties. And so if the bank situation has calmed down,
5 puts.
far, right? But
So,
I'm not sure we're done with the banks, especially some of the weaker regionals. But I don't think it's systemic. And if we can get past that, and we believe the Fed is actually almost done, to your point earlier, which I do think that they are, and the bank system and the problems leads to tighter financial conditions, almost doing the job for the Fed, and then you have a little bit less inflation, you can paint a little bit better picture.
Even with tighter credit conditions, I mean, doesn't that just tell you all of the predictions of just
57 million compared to down 90% from the year before. And this is December 2022. This is like right now. I don't have any cash. This is like 80 cents then. I don't want any of these $7 ones. That's for sure. The fuck out of here. Cancel that. For a month.
Micron's reaction to the numbers yesterday
was really something in order to retain liquidity, but they only hold 915 million, so it closed. Their loans, these bank rates progressively higher and higher with more names falling. Show me the money, big sells.
Some rotation out of equities into fixed income because there is an alternative, and that's the other piece of the story on the markets this year to date.
Well, now people are using mega caps like fixed income, like flight to some sort of safety or defense in nature. Regionals continue to rebound, right? The KRE, the ETF, is up 7% in March. That's actually from the March 23rd crisis low. I should preface that
orders are going through.
23rd low, it's up 7%. You bought more Schwab yesterday. Today got downgraded to equal weight from overweight at Morgan Stanley. Target gets cut to 68 from 99. What do we think?
I'm not gonna go up to $30 fucking dollars. I doubt.
When it was down 30% 2.5 weeks ago, so I still think it's.
Let's see if I can even short physical shares.
Earnings are going to be disappointing, which they probably will be. That I think down 30%, it's already reflecting a lot of bad news. This is the 10th largest bank in the country. It's a premier company. They have liquidity. They can get $300 billion of liquidity if they needed to from the federal programs. They have about $100 billion in cash flow.
I know, but you don't want them to be in a position to have to tap the federal programs, right?
It's not.
That's not the issue.
It's not a credit issue, though. Hold on, Josh. It's not a credit issue. issue. It's a mix issue. Deposits are leaving to go to higher yields, right? CDs, money markets. So it's not like they're losing their customer base. Sure, it's going to have an impact on earnings, but it's not a credit crisis crunch for this company. And I just think that the sentiment is so negative. And so even if numbers come in weak, I think a lot of the bad is reflected in, and you just have to stay patient.
I mean, Josh, you bought it and then bailed shortly thereafter. What did you want to say to what Stephanie was laying out?
I didn't bail. I took a profit. I bought it in the 40s and sold it almost 60 3 days later. So
bail didn't have a negative connotation to it. I'm just saying you owned it for about a week, and you made a profit and you left.
Yeah, bail's not great though. All right, listen, Stephanie is exactly right. Originally, when this stock cratered, people lumped it in with the regional banks, and if you saw, I mean, it was obvious.
Ticker is he talking about? I missed the ticker.
Know anything? You look at it, it's down 20%, and First Republic's down 30%. You say to yourself, "Oh, Schwab must be like at risk of the same thing that the regional banks." Okay, so we know that's not the case now, right? The company very clearly laid out, here's why we're fine. But there's a new issue, and this is not a Schwab-specific issue. Schwab's equity just happens to have become a lightning rod for this issue. Here's the issue. An hour ago, I just literally, in 30 seconds, moved money from Bank of America into the Public app. Public is like a Robinhood, but non-toxic. It's a brokerage trading app. It took 30 seconds to buy Treasury bills. Like literally, maybe 20 seconds. And I was able to go from 0% on my cash in a checking account at B of A to 4.89% in a 6-month T-bill. It's not a fund. It's not a money market. It's literally directly buying T-bills on an app for no cost, and it takes under a minute to do. That's the environment we're in. And in that environment, it's going to be very tough for not just Schwab, but everybody in the brokerage side, in the bank side, to a lesser extent, the asset management side, to justify these sweep accounts that are barely yielding anything. Money has never been more mobile, and the populace of the United States has never been
It's been
more
taking me 10
comfortable
days to get my money in this
around
Questrade. Fucking joke. And it only because it was 10,500 and not 9,999. Like it's retarded.
For years relative to what people thought they could earn even 3 months ago before this whole thing got rolling. So I would not look at this as like a crisis anymore. I would just look at it as, oh, wait a minute, they're going to re-rate all of these brokerage stocks because of the sweep yields and what's available elsewhere from the U.S. government.
Why this down, I wonder? 50 is starting to move up, too. It just went to 40. What is going on here? Is this bank going bye-bye?
Well, it is if deposits are going elsewhere for better yield.
It's a mixed problem. It's not a customer problem. It's a mixed problem.
Aren't they both a problem?
Well, no, the customers are staying with them.
No, but I'm saying, like,
the customers are staying with them, and they're just going to higher yielding assets. That's what I said. Now, that's okay. That's not going to help earnings, which is exactly why I guess this analyst downgraded the stock.
Well, that's what it says.
The stock is already down 30%.
They cite the extended earnings recovery timeline.
Right. Not only is it down 30%, but it's down 37% in the past year. This thing has underperformed, and what I'm saying is I think it's discounting a lot of this, even if the trends continue. All of the banks are going to see this. I'm sure they're seeing it at rapid rates, right? Why not? It's too attractive to move your money from no yield to a higher yield. So it's not a customer problem. It's not a crisis. It's not a credit problem. It's a mixed problem. And I think that it's an opportunity given that the stock is down as much as it is. And oh, by the way, the CEO is buying stock too.
But this all ties into the sentiment in general. So we talked about, Josh made a great point.
See, he's coming out. A lot of these banks are coming down steadily today, guys.
They're going to be moving their money out of banks and into Treasury bills. But what's going to make that sentiment improve? You take a look back at 2019, 2018. In 2018, the Fed hiked rates in December after the market had sold off 17%. And the market bottomed 3 days later. So if you look at it, when did sentiment improve? Was it in January when the market was 10% higher? Was it in March 2019 when the market was 20% higher? Or was it mid-year when the stock market was making new record highs? If the market continues to improve, you're going to see rates come down, and you're going to see the money flow back into stocks. And that's where the power, I think, is in this, where the environment is, where we could go higher. You make a great point. there could be another shoe that drops. You make a great point. There is growth here right now with 3.2% Fed GDP now right now from Atlanta Fed. But the economy is going to slow because
You're more
credit is going
bullish
to
than not right now?
I'm pretty bullish right here. And I think that we're starting to see, you pointed that Michael Burry tweet. There's bears capitulating. If we continue to go higher, we're at a very big inflection point right here in the market. If we push higher, people are going to have to put money into the market, and it's going to be a huge tailwind.
I mean, Art Cashin in the last hour, no one really wants to stick their neck out for the positive side. And he even mentioned, maybe I'm sticking my neck out too far on the negative side, thinking there's a 20 to 25% chance of retesting the October lows.
Yeah.
It's not an insignificant probability.
See what happens there.
Well, I think there is a lot of negativity.
So if it drops, $13, I make like 50%.
And I think the negativity around
Another cancel. .com.
It's very, very, very cyclical. And Jim Cramer made a very good point a couple of days ago. He talked about, this is ahead of Micron's earnings, and he said that these cycles, inventory cycles go in 3 years. We're in the third year, and he pointed to the HP CEO who was talking about this has been drawn down. These inventories have been drawn down. The negativity has been drawn down enough. And look at Micron. It's a true story of the haves and have-nots. What companies have written down their earnings expectations, and what companies have not? Micron laid this groundwork 6 months ago, and that's why it is not trading lower despite double misses. And there's some really great positive things to look at in the environment because a lot of these stocks, they're pricing for 2024 already.
What if, Josh, people are getting too bulled up, or at least trying to make themselves feel that way because they look at the market and say, well, S&P is up 5%, NASDAQ's up 14% or whatever it is this year to this point, but it's been so ridiculously top-heavy that it's masking to, in some respects, how you started the show, saying that under the surface, it's not like the story is overwhelmingly positive and easy to tell.
Look, I think there are a lot of reasons for why large cap is outperforming small cap once again this year. But one of the more obvious reasons is that large cap companies just have better capitalization. They have spent the last 3 years refinancing and refinancing again at the lowest rates in history. They've got huge amounts of cash. They don't need to tap the markets. So it would make sense in this environment where we know that there's credit contraction either here or arriving soon, sector by sector, region by region. It would make sense that investors would be emphasizing quality, balance sheets, versus things that were more popular last year, like cyclicality. So that shift in mentality, you could understand where it's coming from. It just so happens that benefits the NASDAQ and the S&P 500 just purely on a factor basis. What hurts? What makes small caps not look as great? What makes equal weight not look as great? Well, think about how much exposure the Russell 2000 has, A, to more cyclical companies, and B, to banks. The Russell 2000 is lousy with banks. So that's where you get that outperformance.
Just writing shit against this, and he's the one who was talking about SBNY, SI. Ooh. This could not be good for this company.
The momentum is where it is, and you'll see more and more people adopting that trade, especially on a day like March 30th, when the quarter is coming to a close, and everybody wants to look like they were in on the trade that worked.
Right. Yeah. So, Josh, to your point, tech and comm services is 34% of the S&P 500. 75% of the S&P 500 is more growth, right? And so that is actually what has been working. It stunk last year, but now it's not only reversion, but it's the flight to safety. But if it's such a big cohort, right? And so that's why I think the market has actually hung in there, because it's such a big representation.
Well, of course. But there's the good and the bad with that.
Let's see his thread.
There's the good and the bad with that.
Let's see his thread.
The NASDAQ 100 is on pace for its best quarter since the second quarter of 2020. Yep. Meta's up 72%. It's the second biggest.
They use crypto deposits to fuel high-yielding lending. I'll just leave the thread, and you guys can read it if you want.
So you got $100 upside in their minds. Big winner for you.
Big loser last year.
Big loser turned into a big winner.
Yeah, I mean, the stock is still down 10% in the past year, so right. But it does.
Are you back at even or no?
Yes, because I was averaging down all last year, right? So, I mean, I was wrong last year, but I think that the story is now really shaping up in a different sort of way. I thought this year was all going to be about cost cutting, and it is. A lot of it is cost cutting and OPEX and CAPEX, and they've gotten religion and the year of efficiencies or whatever they're saying. But I now think that people are starting to figure out that this company actually can grow revenues again, not just from Reels. Click to message is a
something like a $15 billion revenue run rate for the company by the end of this year. So they're generating a lot of cash. Hopefully they don't spend as much on Meta, but that's actually kind of like to the side, right? Now we're not even talking about the metaverse really that much with Meta. We're talking about the old school company, and that's really the reason why I bought it last year all the way down, because I did believe that there was value in the legacy business. I still do.
You want to take on, Jimmy, this issue that Laura Martin provocatively puts forth today, the Needham analyst? If Apple were to buy Disney with shares, it could be worth 15 to 25% more.
Yeah,
probably outlandish that it would happen, but famous last words.
Yeah, we haven't played this game in a while, I'll admit that, but it's a parlor game we've played a lot over the last 7 years with, Apple when it went to 1 trillion market cap, then 2 trillion market cap. What if they bought this? What if they bought that? I mean, I've got to say, I don't think they're going to buy anything, right? The last big purchase, I know you want the answer to the question, but let me give some backdrop. The last big purchase they made was Beats by Dr. Dre. When was that? 2015 for $3 billion. So look, I think they could be stronger together. That would certainly help the Apple TV program. I mean, Apple would have a new business line. Everybody's wondering what their new business line is going to be. Is it going to be a car? Are they actually going to, open a bank? Things like that. But unfortunately, this parlor game, it just leaves me cold because there's so many things they could buy, and they just haven't for years.
Bill, you got both of these stocks.
I think if anybody's acquiring something, it's Disney is going to acquire something else. And Iger is going to make a splash somewhere. But I think both are very unlikely at this moment. But if I had to look at something being more likely to be Iger making a move.
Josh, I'm fascinated to hear your opinion on this. One of the reasons why I wanted to do this segment in the first place.
It's unimaginable to me. Just looking back at the history of Apple, I think the biggest acquisition we've ever seen them do was a headphones company. So it's hard for me to imagine a universe in which they feel compelled to take something that big on and get into businesses they've never been in before, like theme parks and cruise lines. And I really don't understand the provenance of this idea. It's like a fever dream. Or maybe somebody, like, there were edibles involved.
It's Riverbank. He's shooting on a bank called Cross River Bank, too.
It'll happen tomorrow, and then you guys can rerun this clip, but I don't know.
Right. No, believe me, we will. You'll be hearing from
Not
Laura
even
Martin,
public.
by the way.
Crypto's falling, even. So they scam people in, and then they immediately dumped on them. There's your Bitcoin movement.
The committee weighing in on that next. We're back in 2.
SiriusXM presents a brand new show, The Last Mile Radio.
The Last Mile Radio is all about mass incarceration, criminal justice reform, and paving the road to success.
Each week, we'll bring you stories with entrepreneurs, celebrities, and even some politicians who are changing the game on criminal justice.
Hey, what's up, world? This is Sway Calloway. Check out my friends Chris Relentless and Maserati E. They're the new hosts of The Last Mile Radio.
The Last Mile Radio, Saturdays at noon East on Triumph, SiriusXM 111, or anytime on the SXM app.
Cannot get this out of my nose.
Honey, is our car still under warranty?
No, not anymore.
My sister just got an extended service plan from Ox Car Care.
Ox Car Care?
Yep, Ox will cover our repair bills if anything happens to the car, new brakes, a transmission, AC, or engine problems. Plus, Ox Car Care offers free oil changes, tire
Still,
rotation,
what
and
is sentiment on FRC anyways?
Ox gets it fixed for us. Free oil changes, free tire rotation, and free roadside assistance? Wait, what's the number?
800-695-2073. Ox has a 30-day money-back guarantee and is A+ rated on the Better Business Bureau. They handle their claims from start to finish, unlike the other warranty companies. We should call now. 800-695-2073.
The last thing we need.
Census analyst price target on FRC is $144. With a low of 7. All right. So it only has 2 people on it, I guess. 194 and 97. Like, that's not much.
At Ethos Life, we busted all the myths about getting life insurance. Like myth number 1. Life insurance?
What is this, the CEO? Is this the CEO? CEO of FRC. The events of the past 2 weeks have been unprecedented. Our commitment to service is unchanged. We maintain well positioned. We're grateful I mean, they all say the same shit.
Workplace coverage usually only equal to a year's salary. That won't nearly be enough to cover your family's ongoing and future expenses. A long-term, affordable policy from Ethos can give you the peace of mind that if something happens to you, your family is well covered for years to come. Myth number 3.
Getting life insurance? It's just too complicated.
At Ethos, our 100% hassle-free online process can give you a quote in seconds, application in minutes, and coverage in hours. With no medical exams or blood work needed. Just answer a few health questions. Get your free online estimate at ethoslife.com. That's ETHOS life.com. Rates will vary based on age, underwriting, face amount, and type of policy.
To get the 50 cents on this that it was at, or 45 cents, or even $1 here, would have been nice.
All right, we're back. Our call of the day is Walmart. Why? Because it was upgraded today to outperform at Evercore. The price target to 160. The firm says there's improving traffic trends. There's the stock. It's not doing a whole lot. Stephanie Link today on this call.
Today, so
I know you like that one better, but how about this right now?
Well, when I read this note, I kind of said the same thing can be said for Target, right? So they're seeing better top line momentum. They're gaining market share, especially at the upper end. They're defensive for trade down. Inventories are improving. The difference is Target actually trades at 18 times forward. Walmart trades at 24 times forward, and that's why I gravitate more towards Target. But it will be interesting because there is a catalyst for Walmart next week on the 5th of April. They actually have an analyst day. And so I think that they'll have great long-term kind of, kumbaya moment, if you will, with the analyst community. And I think that's really one of the catalysts for the shares. But
do you think do you think this call's trying to get ahead of that?
I do. But I mean, I don't think they're going to say anything that's going to be really game-changing, but just reinforcing that things are very good at the company, and this is a stable company, and it's a staple too.
Well, you said it's a staple. Here's the problem with some of these staples right now is they're at these high multiples. I think Walmart's at 23. We don't own any really hardcore staples like that.
Well, that's why I said Target. Yeah. Target is now by the way, it is a staple in the Constitution.
Yes, and we own McDonald's. I consider McDonald's a staple. It's a capital-light business. And that's
monthlies though, hey, they're not weeklies, so that's like April 21.
Are going to have to be sacrificed, and staples are that because overall, I think they're a little high on multiples.
Just so you know.
I'm a little nervous about the consumer, even though I'm more upbeat about the economy.
You're
broadly.
50% in tech?
Yes, nearly 50% in tech right now. Yeah, we've been like that.
So you're like double the market.
Yes. Well, tech and communication services. But yes, we're very bullish in tech with semiconductors. NVIDIA's our largest position. AMD is number 6. Micron number 4 or 5.
Jimmy, how about Walmart?
You know, I've been telling you for quite some time, I'm looking in retail. I haven't pulled the trigger. Sometimes I feel a little self-incrimination about that.
You consider this, I mean, I feel like they're two different conversations. Retail and this. I mean, right, when you start, as to Steph's point, staples versus retail. Yes, it's a retail establishment, but...
Okay.
You know what I mean?
I'll grant you that, but here's where I'm going. Here's where I was going with that is, in terms of retail in general, whether it's staples or the super discretionary stuff that I'm in, right? Like Win, like GM, right? That is a call on my part that I don't think we're going to have a recession. Scott, yes, I do think the chances have gone up, but I still don't have a recession as my base case. If I started to get into a recessionary mindset, Walmart's exactly what I'm looking at.
Josh Brown, what about you? How do you look at a stock like Walmart?
Damn.
I wouldn't buy it because I think there's a recession coming. It's not like Walmart loves a recession. Maybe it goes down less than other stocks. If you're really concerned about like macro stuff and recession, don't even bother with stocks. Buy GLD or make that a part of your portfolio. It's about 5% from its all-time high, which it hit in the summer of 2022. A lot of people think gold is an inflation hedge. That's not actually what it does. Gold is the type of instrument that does well when there is mass concern about the banking system or the global economy or whatever. That's what asset managers reach for. They start making it a 1% sleeve in their portfolio. The people that had it at 1 make it 3. Like that's what you want to do here if that's your real concern. I don't do that personally. But taking a look at the technicals in gold, taking a look at the net inflows to gold, just had the first month of net inflows going back to April of 2022. So almost a year since we've seen this. That's the trade that will work in that environment.
I agree with Josh here big time. I mean, I think I like gold a lot. We have have a 6.5% with that tech as well. We also have a 6.5% allocation to gold and gold miners. And Josh pointed the technicals there. Gold's hanging up extremely well, extremely technical. But you know, you got to be careful. It's one of those. It's a very volatile asset. But I'm upbeat right here in the environment that I see going forward with the Fed lifting their foot off the gas, and that's why I'm bullish on tech. I like having gold to lean on in the portfolio and avoid the staples. In fact, if you look at some of the technicals, talking about the NASDAQ, the relative strength of outperformance, using the staples as a denominator to look at a chart with the Qs. The Qs are really breaking out in that pattern right now.
It's 39 cents? What? That can't be good. Can't be good. Why is this moving up so much? What is going on? You know what I'm saying? That can't be good.
We're at the end of the first quarter, so we're going to look at some of the winners and losers when we come back. And do not miss a special CNBC Pro Talk tomorrow on how top women in finance are putting money to work. It's hosted by our very own Patty Martell, featuring halftime committee members Jenny Harrington, Liz Young, Bryn Talkington. You go, Patty. For more, go to cnbc.com/ProTalks. We're right back.
This is a special alert to all Americans who own a vehicle with less than 200,000 miles with an auto warranty about to expire or with no warranty coverage at all. Due to a decline in the economy, CarShield is announcing a low-cost month-to-month vehicle protection plan that is now available to the public to save any driver out-of-pocket expenses on future auto
Yellen gonna
repairs.
say here.
Call now to find out how you can pay almost nothing for covered auto repairs. Yes, you heard that correctly. Pay almost nothing for covered auto repairs. An open phone line has been established for all drivers to call for a free
Scalp
quote.
shorting that. Barely made anything. Was going to close at 26.66. I closed at 27.27 instead. And it's now it's below 26.66. Like, what's the bottom then? 25?
Free towing and car rental options at no additional cost.
Double bottoms at 25. Heads lower. FRC continuing to drop. Drop down 5.
What do you have to lose? Call 800-482-9747.
Wells Fargo, did it break? Yeah, Wells Fargo broke. Oh, goodness. They're all dropping below the 200 EMA.
Working capital to get things moving. The financial assistance your business needs is waiting for you at Everest Business Funding, your #1 trusted source for all your business funding needs. Just go to myeverestfunding.com or call 844-FINANCE. You'll see just how easy it can be to get funding. Everest Business Funding helps business owners get the fast working capital they need with a hassle-free application and no hard credit checks. Everest has the best deals for your business needs and fast funding, usually the same day. Everest goes above and beyond traditional funding providers because they want your business to succeed as much as you do. Grow your business with Everest Business Funding, helping business owners get ahead with fast working capital. Learn more at myeverestfunding.com or call 844-FINANCE. That's
Like, you gotta pull, if you pull this back though, guys, like, holy shit. $13 is the low. Like, I mean, okay, if 13 is the low, 13.98, and FRC's is 11, like, you could make 1%. You know, relatively safe here.
The Blendjet 2 portable blender is
And you gotta worry about if they get bought out, if they actually go 2-0.
Get yours now on blendjet.com.
Wake up with the ultimate pre-market morning show. Squawk Box, weekdays, 6 a.m. Eastern. Streaming on Peacock and on CNBC.
It just went up again. Waiting for this. I had one fill at 40 cents. I don't know why it's saying 35, but I am getting some to fill at 40.
And here's your CNBC News update.
Let's go.
Just 3 days after the shooting
FRC at 11.
that claimed the lives of 3 children and 3 adults.
11 for tomorrow. Pays 15 cents.
Parents, their children, and students rallied outside of the Tennessee State Capitol
Pays a
building,
percent and a
advocating
third.
for stricter gun laws. Meantime, nationally, it is baseball's big day. For the first time since 1968, all 30 teams are set to play their first games on the same day, with the New York Yankees and San Francisco Giants opening the series at 1:05 Eastern Time, and my Red Sox and Orioles at Fenway at 2. And Lolita, the 7,000-pound orca, is expected to be released back into the ocean after spending more than 50
So just a little lower than what I wanted on
The leader
stocks.
is believed to be around 57 years old, the oldest orca to be held in captivity, and will live out her remaining years
Getting
off
smoked.
the coast of Washington State. Scott, back over to you.
Yeah. So
Okay. Bertha, thank you. Bertha Coombs. Let's get to our chart of the day now. Shares of GE nearing a new 52-week high, up double digits this month. One of Stephanie Link's stock summit picks. Man, this thing is up, what, 43% in the quarter, nearing a new high. It's up 101% off the 52-week low. You said you were going to be patient with this when you got in. Through all of that, this is finally paying off.
Finally, I know. And I bought more when they announced the spins, right? That was, to me, the catalyst for me to be even bigger. And so they spun off the GE Healthcare, which I also own, and it's been a really good performer. And they will eventually do the renewables.
If FRC were to drop 20%, it's still just barely under 11. Like, that's not too bad.
Business, which is top notch. And their analyst meeting on March
Wells Fargo just hit another red bar.
But then they raised numbers in organic growth.
Schwab is
for the long term. Nobody really expected that. On the day, the stock rallied 5%, but I think that's what is carrying the momentum.
Is power the weakest link of the three big units of healthcare and aviation and then power?
Yes, but you know, it's starting to get better in terms of profitability, right? So really eating out those costs and really trying to figure that out. So
25 divided 250 is 10. So it's got to drop 90%. It would have to fall into the abyss for me to lose money here. So, you know, yes, you could go with 90, but percentage-wise, you got to just go by percent, right? 40 divided 250 is 16%, and you know, 90 divided 5 is 18. Like, I don't really care about 2%, where I might have to pay an additional $2.50 a share, like for 2%. No, I'll go with this, nice and safe. Well, not nice and safe. After SBNY, literally nothing is safe. I can't even say that anymore. I can't say safe, because after SBNY, nothing on earth is safe. None of these stocks are safe. Intel's not safe. Fucking Walmart. You heard the guy. He's like, yeah, Walmart's not recession-proof. They might just go down less than other people. They're not recession-proof. So
it's a slog right now. We have to see how the whole thing pans out. And if we go into a recession, it's not going to do well as a sector. But I do think there are pockets of opportunity for the longer term. So keeping an eye on it in the short term.
50. I don't want to be exercising these fucking
Over there, Boeing up 9%, Cleveland up 11%,
stupid ass Rumble.
Industrials up 2%.
Whatchamacallit?
The board for your three stocks and your sector.
Yay, Jimmy.
Down to 15. What? Okay, well, these just filled for me. They just filled. So, I don't know about that. That can't be good. They filled, so I'm making $240, risking $2,500.
That's how I'm positioned. If there is a recession, those nice gains are going to turn red. I mean, those stocks are not going to hold up in a recession.
But you've had to be, just given what's really won so far this year, how it's been such a tech and communications heavy run, you've had to really be a stock picker's stock picker to have that kind of performance 3 months in.
It is true. Thank you. I'll take the compliment. I'll also, show some integrity here and say that these stocks were up massively more than this a month ago. So they have, if you look at the 1 month performance, it's underperformed the S&P 500 of all three of them, and they've been terrible. But part of the discussion in the A block about what's the market telling us, is the sentiment good or not? Part of this give back is that there were just tremendous gains in the first 2 months of the year. We know that, right? I mean, there were just tremendous gains in the cyclicals, in the high beta, in the kind of crummy stocks. So some of that had to be given back.
So Josh, for the 12% that Chubb was down, Ulta was up the same amount. Nextera is down. I mean, energy has been a disappointment. And aerospace defense up 2%. When you look through your picks, what do you think is going to happen here?
This is good. 23.5%.
Well, I think the main thing here is that none of them have.
Now 21%.
There's nothing thematic about this particular mix of holdings, and I guess that's probably why I like what I did.
1750 pays $5.
That's designed to crush the market.
29% return.
All of these companies have
790 on 25.
as to why
32% return here. 32%. Like, talk about sketch. They're gonna pay. Someone's gonna pay you 32% to hold to agree to pay $7.25, meaning your break even is $17.19. So they think it's going lower. This contract, they think it's going lower than $17.90. Wells Fargo is just getting smoked. Probably 60% now. 40? Always loads slow. I don't know what's up with Wells Fargo. Like, it's not even loading. Yeah. Fuck. Oh. Red. Oh. Need to get those in. Holy shit. Called in, yeah, I mean, like calling the Dow Jones drop, but I mean, it's just bled the entire day. That's unexpected.
Most people don't know it, but the IRS adds interest charges to your tax debts daily. So if you owe the IRS today, you'll owe even more tomorrow. And it doesn't stop until you get right with the IRS. The good news is getting right can start with one phone call to Optima Tax Relief, America's #1 tax relief firm. Optima's tax professionals specialize in the Fresh Start Initiative, a powerful IRS program that can save you thousands if you qualify. In fact, the experts at Optima have resolved over $1
What's for tomorrow? Is that for tomorrow? Well,
consultation.
Call 800-901-3022. 800-901-3022. 800-901-3022.
Optima Tax Relief.
Some restrictions apply. For complete details, please visit OptimaTaxRelief.com.
Hi, Gwyneth Paltrow here. We do.
yeah, so what's going on here?
We type,
My
text,
phone is
chop, mix,
yeah.
cook, open jars, play music, drive places, day in and day out, every single day. So when our hands hurt, we can't do anything. And that's why I love CopperFit hand relief compression gloves. The open finger design lets me type and text with complete freedom. And that gentle hug the compression gives my hands, what's not to love about that? But the non-slip grip in the palm, that's pure gold. That lets me keep a firm hold on the steering wheel, the phone, or whatever I'm trying to grip. CopperFit hand
Take my
relief
computer
is a
and it's like
necessity for me,
locked.
and they're pretty cool looking, which makes wearing them even better. CopperFit hand relief. Give them a try. You'll love them.
Get yours today for only $19.99 at CVS, Rite Aid, Walgreens, Target, or Walmart. Or go to copperfitusa.com. Individual results vary and results are not typical. For more information, visit copperfitusa.com.
The world of business.
They may have to actually extend the merger.
Opportunities driving investors.
It's a reason to buy.
Your money on the line.
This is a strong consumer economy.
CNBC.
Let's get the very latest on the story.
Sirius XM 112.
We're back. Bill Baruch has a new move, and it's in energy, which is still attempting its bounce back. Crude oil right now above $74. What'd you do?
I added Pioneer Natural Resources. It's a name that we owned for the last 2 years. We cut it at the turn of the year. Just a little nervous about the price of oil. These exploration and production companies, they're very tethered to the price of oil. And I was worried we'd get down below 80. Now, we've flushed out a bit. I'm getting a little more upbeat. I think there's going to be a China impulse later this year. It's really going to pick up. As well, people are getting negative about the Permian and shale production picking back up, and I think we'll start to see that a little bit of uptake, and we'll see a little bit of more production come online from them. 13% dividend as well. I think it's just a really great place to be and add to.
What do you think about energy here?
A couple of things.
Is this bounce in crude legit?
I think
short-lived.
I think it is. I mean, there may be a
That's
little
for
give and take.
$8 Rumble puts tomorrow. Holy shit!
There's a growing chorus of people saying that the shale well production is declining a lot faster than anyone expected.
For
right?
$8 puts.
On supply. Scott, you and I have had a discussion this week.
2%. What are the odds it goes to $8 from $9? Can't be very good odds. That's free money.
No, I don't.
Dude,
but it's not my call.
20
and I think they're trying to work that around the debt ceiling. I mean, frankly, I don't think the government when they're looking at the debt ceiling, is really eager to go out and spend on a few 100 million barrels of oil. But they should, Scott. They should.
Steph, how about this space?
I'm overweight. I was double my bench last year. A little less than that because I took some gains early in the beginning of the year. But actually, the pullback, I started adding back
Still down.
some Diamondback energy. But I take the barbell approach. So Chevron is kind of like the big blue chip company with a good yield, steady businesses, diversified businesses.
600%.
Quite the opposite. There's a lot of beta
Holy
there.
shit.
And I think, though, that the fact that it's down 5% on the year, trades at 6 times earnings, and they're doing all the right things finally. They're doing all the things that Chevron has been doing for years. They're buying back stock and increasing the dividend and that sort of thing. The yield is 9%, given all the special dividends that they've had. So.
Yeah. I have some breaking news I want to get to with our Steve Leisman in Washington regarding the Fed. Boston Fed President Susan Collins about to speak at the NABE Economic Policy Conference. What's she going to say, Steve?
Yeah, here, Scott, we have two officials talking right now. Tom Barkin, also from Richmond, out just on the wire now, and Susan Collins here at the NABE meeting. Collins is going to say that some additional policy tightening will be needed, and Barkin's going to say policy will need to be nimble. If inflation persists, we can react, we the Fed that is, by raising rates further. He says the range of outcomes is wide. Now, on the issue of the banking turmoil and the impact on the economy, Collins will say there's increased uncertainty about monetary policy. Banks are likely to take a more conservative outlook on lending, and reduced bank lending may partially offset the need for additional rate hikes. Now, Barkin is going to talk about this idea. He sees that both of them, by the way, see the banking system as sound and resilient. Barkin going on to say that he doesn't see any change at all really in deposit or in lending out there or in deposits right now. He says lending pullback would limit consumer spending, business investment as well, but it's too early to know if that's going to happen. Tightening credit, he says, could bring inflation down relatively quickly, but inflation, he says, could take time to return to target, and he has his doubts that that's going to happen. So, guys, Scott, you can see essentially, if you look, I want to see if there's been any impact at all in the probabilities, and I don't see it. What I do see is a slight increase, 57% right now, in the idea of the Fed hiking back up to that 5.25 range, but a 42% probability of no change. And really, that's kind of the way these guys sound, a little bit leaning towards that hike, but with kind of reluctance because they don't know the impact of the banking turmoil on the economy. And I think that's going to be the Fed mantra now for at least a few weeks till we see how this banking situation works itself out.
It still feels, though, and you correct me if I'm wrong, that the prevailing view among Fed presidents at this moment remains we can continue to fight inflation and have the tools to put out other fires if, in fact, they should start, as long as they're not too large.
I think that's an excellent analysis, Scott, and I can actually back it up with some comments that were made by these two officials. Barkin will say not every bank failure is a Lehman Brothers, and I think that's important, that they can have bank failures, and you don't necessarily are going to have a major disruption to the economy. And Collins is also saying that the Fed will use whatever tools that are necessary in order to stabilize the banking system. So this idea of there being a two-track, that they can handle monetary policy and inflation with the monetary policy tools and the banking with the supervision tools, that's the mantra at the Fed, and that's why I think they're probably leaning towards it. We get some vital inflation data tomorrow, Scott, as you know, and there'll be a lot more data to come, and then we'll have to watch, for which there is not terrific data, and I'm trying to figure out what that is, what's happening with bank credit, bank tightening, and the impact that could have on the macroeconomy.
I mean, the other point, too, I'm just looking at the regional bank ETF, which some are pointing out as we're having this conversation is down. It may, if we can throw up the KRE intraday, guys, please, while we're having this conversation. It's somewhat unsettling, I think, as we are seeing that go to the lows of the day. That, on one hand, Collins says, yeah, banks are going to continue to rein in their lending, but we're going to keep tightening anyway because inflation is not yet to the point where we feel like we can stop. They better get it right. They better get it right.
So since this thing began, Scott, I've maintained that the importance of the credit tightening is going to run through the inflation numbers. In that the Fed is as concerned as you suggest, and you're right about that, is so concerned about inflation that the extent to which the bank tightening credit matters, and if it's not a systemic risk issue, the extent to which that matters, it matters the effect on the macroeconomy and on inflation. The trouble is that takes time. And so essentially, as we've talked about before, the Fed is having a little experiment here. This idea is a concept that they can run monetary policy and financial stability with different tools, and that the twain aren't necessarily meeting immediately. What the two here are pointing out is the possibility they will meet, and whether they want to take that gamble come the May meeting, raise that quarter, which would be 50 basis points of tightening since the bank turmoil began. It seems like they're kind of leaning that way if the inflation numbers remain high.
Yeah, good stuff, Steve. Thank you for the latest. We'll see you throughout the rest of this afternoon. I'm near certain of that. That's Steve Leisman joining us there. Up
Scott,
next, Mike Santoli.
Yeah.
Yeah, go ahead. Yeah.
Yeah, there's one more thing, right, which is we're going to get that H41 at 4:30 today, which is going to inform those bank stocks and find out how much lending there's been at the window and the new Fed facility. So that's something else to keep on your radar.
Oh, good. And yours too. And that means we'll see you probably multiple times over the rest of this afternoon. Steve Leisman, thank you. Santoli, he's next with his midday word.
At Ethos Life, we busted all the myths about getting life insurance. Like myth number 1.
Life insurance? I can't afford that.
At Ethos, we have term life policies everyone can afford.
MCB had weeklies. I don't, $60 stock doesn't have weekly options. That doesn't even make sense. How do you not have fucking weeklies?
Usually only equal to a year's salary. That won't nearly be enough to cover your family's ongoing and future expenses. A long-term, affordable policy from Ethos can give you the peace of mind that if something happens to you, your family is well.
Out of curiosity, right? MCB. If we were to go December, that's the farthest it even goes, right? And we go all strikes. What are they paying you to hold this thing? They don't 1750 is the lowest they even go. 1750 is the lowest they go. They're paying you $10. They're paying you $10 to hold this bank until December. Okay, $10.50 to hold it. It's only $27. They're paying you for the stock to hold the fucking thing. What do we got? September. Okay, September goes all the way to $2.50. Oh my god, it pays 80 cents. It pays 80 cents, and there's 383. The volume is insane. 383. They pay you 80 cents on 250. 32% of the price of the stock to hold that through September. What? 35% here. 35%. To hold it. Just to hold the stock. To hold a bank. That if you go back 1 year was $115 fucking dollars. $115. You got to go way back here. The lowest. It's at its all-time low. All-time. Or sorry, let's go 5 year. It's at its 5-year low. Holy shit. What about June? What are they paying you to hold till June? 75 cents. 500% up today. 75, like 30%. Hold this till June. Holy shit. Oh my god.
The news has to be better to keep us up there. So I think the last hike, if this is what we're looking at, is almost always going to be a close call. The things we're worried about are not going to be manifest for a little while.
It's 10% in line.
A lot of huge swings in the outlook from what was said there, but
10% a month to hold till June.
You don't get any all clears in this type of environment.
No, but to your point though, the
with
market's done okay.
the lowest possible risk.
The banking crisis, if you want to call it that. it's probably given them a good bit of
Yeah, I would say that's part of it. I don't think they're necessarily fixated on every tick in the S&P.
No, but if it was an ugly market picture since then, I can't imagine that they'd be sitting there thinking, yep, we're going.
Perhaps. But I think it's much more about credit is held together, and we haven't really seen a lot of macro stress.
All right, we're stressed on time. I'll see you in a couple hours.
Percent annualized for this. Like, fuck, I might even just do that. 30% return to risk. I gotta risk 250 times 100. I gotta risk 250 bucks. I make 75 bucks. Toss that in the fucking what do you call it? Toss that in a TFSA or some shit for a few months. I mean, fuck, if it goes to 13, what's the high on that? I don't even know. What's?
You want your business to succeed, but need working capital to get things moving. The financial assistance your business needs is waiting for you at Everest Business Funding, your #1 trusted source for all your business funding needs. Just go to myeverestfunding.com or call 844-FINANCE. You'll see just how easy it can be to get funding. Everest Business Funding helps business owners get the fast working capital they need with a hassle-free application and no hard credit checks. Everest has the best deals for your business needs and fast funding, usually the same day. Everest goes above and beyond traditional funding providers because they want your business to succeed as much as you do. Grow your business with Everest Business Funding, helping business owners get ahead with fast working capital. Learn more at myeverestfunding.com.
Well, they finally bottomed out from the looks of it. Intel Corp is gangster strong. Gangster strong. This chat is boring me. No offense. Might as well just be talking to myself.
The only corporate card and spend management system designed to help you spend less money so you can make more. Most corporate credit cards offer points as incentives, but those points amount to less than their worth in real cash value. Ramp's business cards offer you cash back, real money in your pocket. Plus, you control who spends what with each vendor. And Ramp software collects and verifies receipts automatically, which means you'll stop wasteful spending and close your books in hours instead of days. Businesses that use Ramp add up to 3.5% to their bottom line the first year. If you're a decision maker, adding Ramp could be one of the best decisions you've ever made. And now get $250 when you join Ramp for free. Just go to ramp.com/news. Ramp.com/news. ramp.com/news.
Is your car still under warranty?
No, not anymore.
My mechanic just
It's up
suggested
for
extended service plan from
90 cents. The high is 90 cents. I mean, that's not too bad for.
happens to the car. New brakes, a transmission, AC or engine problems. Plus, Ox Car Care offers free oil changes, tire rotation, and
Let's look at May real quick.
Wait, you pay nothing on the repairs? Ox just gets
2-month hold, guys. 2-month hold. Oh, they don't go.
free roadside assistance? What's the
Fuck. Definitely not looking to risk 1750. But June, hell yeah. 250. Show me the money. Put that in a TFSA.
Last thing I need is an unexpected car repair bill. I'm calling Ox Car Care now. Call Ox Car Care for
I might not even be allowed actually. In a TFSA. Probably can't in a TFSA. Probably won't let me.
Ox Car Care today. 800-695-2073. Hello, I'm Ryan.
And I'm Catherine.
We're part of the BlendJet team.
And husband and wife. If you're one of the 5 million people who use a BlendJet portable blender, thank you.
A few years ago, I had a freak accident and almost died. Daily smoothies have helped me recover.
We created BlendJet to help people live healthier lives by making it easy to enjoy perfectly blended
For
smoothies
2
and
months?
protein shakes
That's fucking awesome.
anywhere.
That is right up my alley.
Blender is powerful,
No
USB
joke.
rechargeable, cleans itself, and comes in over 30 colors.
Get yours now on blendjet.com.
This is a special alert to all Americans who own a vehicle with less than 200,000 miles with an auto warranty about to expire or with no warranty coverage at all. Due to a decline in the economy, CarShield is announcing a low-cost month-to-month vehicle protection plan that is now available to the public to save any driver out-of-pocket expenses on future auto repairs.
Risk $500 or risk $500.
Nothing for covered auto repairs. Yes, you heard that correctly. Pay almost nothing for covered auto repairs. An open phone line has been
Today on what?
for all drivers to call for a free quick quote.
Pay to play the banks?
Drivers who are covered will not have to pay for covered repairs again. This protection plan is at an all-time low.
600%, bro.
Drivers who activate this vehicle protection
I'm looking at this, some free money on this bad boy.
Free towing and car rental options.
It doesn't have weeklies though, unfortunately.
800-482-9747. That's 800-482-9747. What do you have to lose? Call 800-482-9747. Again, 800-482-9747.
All right, join me 3 o'clock Eastern Time, closing bell. We have a big show coming up. The PIMCO playbook from Aaron Brown. Number 1, we got a lot more Fed speak, too, this afternoon.
15 foot.
I'm sure you're going to see Steve Leisman again. Joe Terranova, Victoria Fernandez. I will see you a couple hours' time. Let's do final trades.
Doesn't determine the options. The CBOE determines the options. So you have to click. See, 9 near strikes is 9. That's on your probably on what's called near. You need to go to all. You have to click all.
Micron double miss this week, double miss at the end of December.
Just scalp these MCBs, the ones that I sold for 40 cents. I just closed them for 30. This is a little scalp.
I think the oil stocks are trying to bottom here. I like the odds. IEO is the way I'm invested in this space.
Give me a name.
Same thing. CVS is bottoming.
All right, good stuff. I'll see you on the closing bell. The exchange is now.
Thank you, Scott. Hi, everybody. I'm Kelly Evans, and ahead today on the exchange, is the coast really all clear? Inflation overseas falling sharply. The NASDAQ up 20% from its lows. Oil popping 6% this week. Is the market giving us the all clear or not? That's the question we are looking to answer today. We'll read the tea leaves in the options.
Fucking AMC. I'm trying to figure out where I'm like down on like it's fucking AMC. The calls are shot. The calls got obliterated. What the fuck's AMC at? 4.97. Wow. What a joke. The calls are 3 cents. 3 fucking cents for 5.50. Piece of shit. Why the fuck did I put any money into an AMC call? 3 fucking cents. 3? You fucking piece of shit.
We've drifted now negative for the Dow Industrials.
Fucking junker, dumpster fire, fucking ticker. I should know better. Fucking pile of crap.
That's that 50-day average price on a
200 fucking bucks gone on goddamn AMC calls. Fucking stupid. Same 200 bucks in Intel yesterday. You got $1,600. Fucking AMC. Piece of shit. I fucking added some today when it went down, and now I'm considering adding again. Gotta bring the average down, right? Better throw another fucking $30 at it. Piece of shit.
So we're still seeing some relative strength in semiconductors that might be a decent.
Not that I have a fucking bat's chance in hell of it's fucking going up.
Really? It's not the biggest of companies out, but look at this. Look at this move.
Charging company.
EV charging company. It's up 22%, smaller than expected loss for the quarter. Better than expected revenues, and those revenues, by the way, up 283% from the same quarter last year. So business demand is picking up. Again, smaller company, but it still shows some of that growth that some investors are looking for. Evgo shares up 23%.
Mirrors, by the way, some of the momentum we've seen in Tesla. We'll get to that in a minute. I wanted to just highlight what an unusual and unexpected quarter it's really been to start the year. I mean, all of the stuff that was supposed to do the best has actually been the worst. Financials down 7% this quarter.
Plus 15%. The next day down. The next day down. What a dumpster fire.
Value trade, right? These are all value sectors.
Absolutely. So look at healthcare, too. We'll have more on that in a moment. Down about 6%. You might have to be my clearing guy, Dom.
I'm going to clear it right here.
Tech is the best performer, soaring 20%, followed by the tech-heavy communication services space. Dom will have more on that in just a moment. Consumer discretionary as well. One of the biggest outperformers, as we were just discussing, has been semis. NVIDIA up 87% this year. AMD
the thin air, like, I'm debating taking the 3 cents right now. Like, maybe, you know, I pay $5 fee.
sector, but then the tech
25 bucks in my account's better than fucking no bucks, but you know, sure as shit, I'll go to take it and it'll go up. Piece of trash.
The best stock in consumer discretionary, up 60% year to date, followed by Royal Caribbean Wind Resorts. This rounds us out with gains of more than 30%.
Big moves for sure.
See you in a moment.
You got it.
In the meantime, if the semis are leading the way, stocks are shrugging off the banking issues. Does that mean we are actually in the clear? Let's ask Chris Murphy. He's co-head of derivative strategy at Susquehanna. He'll give us the pulse of the options space. And Nuveen Sarah Malik says, don't get too
I paid and it's already down to 3.
just yet. She'll reveal her new
Wait, was there 0 IV on the fucking thing? 0? Why have an options chain if you're gonna pay no IV? 3 cents on 550. May as well not have an options chain. They're basically telling you it's completely like there's no chance that it's going to go to that, is what they're telling you. Take the 3. What's it gonna do overnight? Nothing. Fuck all.
So it's been over a year since we've had this kind of intraday calm. And when things start to calm down in general, people get a little bit more optimistic about their stocks. And we were
5% borrow, and the best it could pull was $5.16 today. With everybody holding, give me a break.
At the end of the day, the Fed and its balance sheet is there.
Maybe I take the 3 cents, and if it goes up tomorrow, I just don't care because I should know better. I'm waiting to short the fucking thing, not buy it.
We're seeing bullish flow in metals and miners. We're seeing bullish flow.
What's the stock doing? It could go all the way to 490. Again, they're holding it under this goddamn 13 EMA. Piece of trash. And it crossed down to the down earlier. Fuck it. Leave it open and see what happens. $30 fucking dollars. 200 bucks. I have $30 left. Good joke. Yeah, that's when I added there because I was at 20 and I thought it was going up. I thought, okay, maybe it'll go to 535 and then tomorrow it'll go to 550. No, the second it hit 516, they shorted it. The second it hit there, boom, now killed it. So, and this will be killed for the options tomorrow. The 550s are going to be worthless. They've got to be. But I'll keep it open. So
the uncertainty ramps up quickly. So, I would say investors
in Starbucks. Do I even want to give them the last $30? I don't think so. Fucking stock, man. What a piece of shit. If it goes to 490, then what? They go to 2 cents? Yeah, I'm done. I'm out. I'm taking the 3. I don't give a fuck. Fuck it. I'm out. Now I don't have to worry about it. Piece of shit. I'll make it back elsewhere. Fucking dumb. Yeah. Talked myself out of it. I'm not giving them the last $30. I lost 147 of 200. I don't know. I must have scalped in there or something. What a fucking joke. Piece of shit. I made some on MCB.
Good to talk with you, Chris Murphy of Susquehanna. Let's get to Sarah Malik now. She's Chief Investment Officer at
$50.
Sarah, welcome.
Ah, man, that's frustrating.
Are you a little more worried now, a little bit less so, looking at the stock markets?
Evgo still pumping.
Was just highlighted as we look to close out the
options really got right.
Hi, Kelly. Markets are staging a relief rally because no news is good news for the financial sector. But what we're concerned about is that soon we'll shift our focus back to inflation and the FOMC. We're worried that the baton will get passed from rate hikes to a recession. We're focusing on 3 areas to determine what that recession might look like. That's any future banking system turmoil, FOMC, and economic data. But our bigger picture view is that the market likely remains in a trading range until we get more clarity here. So we won't be surprised if the S&P goes up to 42, maybe 4,400, but then likely back down under 4,000 to the 36, 3,800.
Yeah, you're gonna do it and then it's gonna pop. Because now that I sold, it's gonna go up, bro. That's how it works. So, but I have fees, so if it goes to 2 cents, I'm gonna have nothing. And if it goes up tomorrow, what am I going to get? 5 cents? Like, fucking, it ain't going to go. The chart is showing 490. It's headed to 490. It crossed to the downside back here. Back here it crossed. 13 just crossed over 48 and VWAP. VWAP's way to fuck up here, but 505 ain't going to be anything. It's a 550 option. 505 won't do shit. And it's looking like it wants to test 490, right? So I don't know. I'm out it. I should have known better. It's fucking AMC, and I you know, fuck. It fucking burns me every time I even sniff at it. Will it moon? It's not a squeeze play, bro. It's a mega cap tech stock. I think it easily go to like $45, $50. 45 for sure. I bet. 25.91. Oh shit. She is falling, guys.
A little bit more worried about some of the retail names, discretionary, you know, those kinds of, I don't know then where that leaves you on like the industrial cyclicals, and where you might go if you wanted to hedge the recession outcome that you're kind of warning about or describing.
Piece of trash.
Our focus overall is on quality, so not
how can it not go green with 185% CTB? Like, you literally just have to hold, you morons. Stop scalping for fucking 5 pennies. 10 pennies. God. You've got them by the balls. And you're fucking, they give it up. Every time that you turn around, they give it up. 25. So it went to 25, which I said, what's the bottom? 25 for a double bottom. So it's getting close to the double bottom range. And then I'm back up to 27.
There's probably more near-term upside. We do get PCE tomorrow,
50-ish.
Could be at or below expectations because one of the key risks of inflation has been wage inflation. That has about half the weight in PCE than it does in CPI. So I wouldn't be surprised to see that come in as a positive number that helps the bulls tomorrow, keeps this market rally going for a while until we start to see our longer-term view that inflation will stay reasonably strong for a while. Interest rates will stay high for a period of time. That's going to have implications and slow the economy. We're just 1 year past the first rate hike. We really haven't seen the implications of monetary tightening yet.
Absolutely. Sarah, good to check in with you. Thanks for your time.
Thanks, Kelly.
Sarah Malik with Nuveen. Coming up, healthcare is coming off its worst losing streak in 3 years. We're going to look at why and whether this 3-month losing stretch is a buying opportunity. Plus, the NASDAQ 100 is up more than 20% from its recent lows.
They're fucking messing around with the options that end on Friday.
Just a head fake by big tech. We'll debate. As we head to break, here's a quick check on the markets. As Dom mentioned, we've given up a 188-point gain to hang on to just a 4-point increase for the Dow, up 11 for the S&P to 4039, and a 0.5% increase for the NASDAQ. Keep an eye on the Russell 2000s, by the way, down 0.25% today as some red is across the regional banking sector once again. The exchange is back after this.
25.26. You sold. You sold for $15.
Don't miss a second of the men's and women's Final Four on Sirius XM and the SXM app. The women's semifinals.
10 contracts for $30, less a $5 fee, plus the fees when I bought it. So $15 in fees because I bought and then I doubled it. So that's 15 or 10, and then I sold 15. Like I made I got to keep $15 out of $200. What a fucking joke. 25, 24. Holy shit! Here we go, guys.
I can't afford that.
At Ethos, we have term life policies everyone
Dumping.
can afford with
It went up 4 cents.
$7 a month. Or myth number 2.
I don't even care. Let it moon. I'm over it. I'll short it. I'll short it when it goes to whatever it reverses.
Long-term affordable policy from Ethos
Stupid stock.
peace of mind that if something happens to you, your family is
Damn! I closed my short at 27.27. That's an extra $150 now.
At Ethos, Plus, our 100% hassle-free online process can give you a quote in seconds, application in minutes, and coverage in hours, with no medical exams or blood work needed.
If it's not anywhere near 550 tomorrow, those won't be worth anything. That's how that works. They'll be considered 0 days to expire, and it's nowhere near 550, so it won't be worth anything. Be worth 1 cent, and I don't think you can close them for 1 cent. Is there news on this? Like, I don't have news. I'm not seeing news. Getting smoked.
Day in and day out, every single day. So when our hands hurt, we can't do anything. And that's why I love CopperFit hand relief compression gloves. The open finger design lets me type and text with complete freedom. And that gentle hug the compression gives my hands, what's not to love about that? But the non-slip grip in the palm, that's pure gold. That lets
Almost
me
back to 40.
the steering wheel, the phone, or whatever I'm trying
I
to
can swing. I can swing
hand
this.
relief is a necessity
Down to
for
swing
me,
that.
And they're pretty cool looking, which makes wearing them even better. CopperFit hand relief. Give them a try. You'll love them.
Get yours today for only $19.99 at CVS, Rite Aid, Walgreens, Target, or Walmart. Or go to copperfitusa.com. Individual results vary and results are not typical. For more information, visit copperfitusa.com.
Welcome back. Healthcare, one of the safer places to be last year, down only 3.5%. It was touted as a top trade for 2023 as well, but it hasn't quite played out. Healthcare is actually one of this year's biggest laggards. It's down 6%. That rivals what we've seen in terms of the financials and energy as well. Within the space, biotech is still red despite the tech run we've seen. It's down 2.5%. Pharma down 10%, but a little bit of a bright spot. The med tech names up almost 1%. So does this mean that healthcare is a safe place to be? And if so, where? My next guest sees more gains ahead for medtech in particular, thanks in part to a weaker dollar. Les Funleiter is portfolio manager for E Squared Capital Management. Les, it's good to have you back. Welcome.
Thank you for having me.
So you think there's a real reason that medtech
1,000% on the $5 put. Oh my god! Look at the volume.
First, let me just say that historically, the
Jesus.
has always been the weakest for healthcare broadly, the big cap. So I expect the rest of the year will be a little bit better. I think what we saw the first quarter was basically a give back of some of the massive returns, and they were really good last year, in particular for big cap pharma and for managed care. So it's giving back some. It's not necessarily a loss per se. But medtech is sort of the reverse. They didn't have such a great year last year. Now they're starting to come back. Like you said, weaker dollar. Procedure volumes are improving somewhat, and some new products coming.
Okay, so let's talk about the names that you like and the conviction that you have. As you said, healthcare usually doesn't do that great in the first quarter anyway. So if things start to pick up here, where do you think people should be looking?
Well, again, I would, if that's the big if, things start to pick up, and we do actually think they will, but med devices in particular, some of the ones like Boston Scientific and Stryker, which are procedure-based, should do better. Others include Penumbra and Dexcom and diabetes. Again, will do very, very well because they have a mixture of growth, but also fairly safe in terms of valuation. Where we, again, would be a little bit hesitant to jump in with both feet would be biotech, which are still captive to rates and overinvestment. Pharma is likely in the middle of the pack in our judgment. Great year last year, solid dividends, but along with managed care, we're going to probably hear some noise out of Washington, which probably amounts to nothing, but will spook investors a bit, at least for the next, say, 2 quarters, and probably resolves itself towards the end of the year. And I'd add for the last bit, we are starting to look at life science tools. There's some very cool trends happening in cellular analysis, single cell, spatial, so Cytic Bio and TEDx Genomics and Akoya, all are beneficiaries of the trend. It's a multi-year trend. So, but I do think there's some concerns about China that'll probably put some pressure on them until like third quarter, give or take.
So finally, where would you say are the riskiest parts of pharma right now? The places that, you know, you wouldn't really want to be playing around if you're not a specialist, I guess.
Well, that's the easiest question for us, non-specialists, biotech. There are too many of them. they all need to raise capital. It's a difficult time to raise capital. The IPO market, which we think will get a little bit better in the fourth quarter, third quarter, fourth quarter, along with the capital raising environment, is terrible. A lot of them have debt, which we've heard is not such a good thing these days. So I would stay clear of them generally, or be very, very selective, both in the company, time, and the position size you take. We have been dipping our toe into one called Biohaven. They've got good data. That would be the playbook if you had to buy biotech. Follow good later stage data.
All right, Les, thank you for your time today. We appreciate it.
Thank you.
Les Funlighter. Still ahead, you know the old saying, as the transports go, so goes the market. Well, the group is falling behind the S&P this month, and insiders say higher rates are a big part of the reason. We'll tell you why and what else might be behind the decline. And as we head to break, let's take a look across the Dow heat map with an 18-point gain. We see Intel leading the way again today, now up 10% in 2 days. Disney up there as well, while Visa, Amex, and JP Morgan are all lagging. The exchange is back after this.
Look, you need to speak already, so we can figure out what the hell's going to go on with this market here.
And now doing the tough thing could qualify you for up to $26,000 per employee at COVIDTaxRelief.org. Government funds are available to reward companies with 2 or more employees who stayed open during COVID. This is
fucking sideways. This Evgo pumps sideways. Intel Corp up, down, up, sideways. Like fucking, this is sideways. CCL, yeah, you're green again, 100% on calls, but I'm holding long, so I don't really care about that. Looks like it's actually curling up. FRC, surprisingly.
Let COVIDTaxRelief.org help you get up to $26,000 per employee. Visit COVIDTaxRelief.org.
What is that paying? 15 fucking cents.
COVIDTaxRelief.org.
It's trash.
Is your car still under warranty? No, not anymore. My mechanic just suggested an extended service plan from Ox Car Care. Ox Car Care? Yep. Ox will cover your car repair bills if anything happens to the car. New brakes, a transmission, AC, or engine problems. Plus, Ox Car Care offers free oil changes, tire rotation, and roadside assistance.
Wait, you pay nothing on the repairs? Ox just gets it fixed? Free oil changes, free tire rotation, and free roadside assistance? What's the number?
Yep, you don't pay, Ox pays. Ox even has a 30-day money-back guarantee and is A+ rated on the Better Business Bureau. They handle their claims from start to finish, unlike the other warranty companies. Here's the number, 800-695-2073.
The last thing I need is an unexpected car repair bill. I'm calling Ox Car Care now.
Call Ox Car Care for your free quote, 800-695-2073, or online at oxcarcare.com. Ask about senior and military discounts. Don't get stuck with a major car repair bill. Call Ox Car Care today, 800-695-2073.
The market pregame, the opening bell, the crucial start of the trading day. Key data, big interviews. Squawk on the street, 9 a.m. Eastern, Sirius XM 112. The market pregame, the opening bell, the crucial start of the trading day. Key data, big interviews. Squawk on the street, 9 a.m. Eastern, Sirius XM 112.
Welcome back to the exchange. Markets in the green, but just barely in the Dow's case. A 3rd-point gain by the S&P, up 0.5% for the NASDAQ. Kohl's having its best day since January. After its CEO disclosed he bought about $2 million worth of shares yesterday, nearly doubling his stake, though it's still mostly made up of unvested shares of restricted stock. Kohl's up 5% today. It's still down about 30% since he became CEO just about 2 months ago. And remember when Charles Schwab, CEO, told us that he bought 50,000 shares back on March 14th amid all the banking turmoil? Well, today, Morgan Stanley is downgrading the stock to equal weight, saying customers are moving cash out of sweep accounts and into money market funds at a rate of $20 billion a month. That's double what the company was modeling, Morgan Stanley, that is, and the firm expects that to hit Schwab's bottom line sooner rather than later. The shares are down 5% today, down 20% since regulators shut down SVB on March 10th, and down nearly 40% since January for their worst quarter since 2008. And yes, financials broadly are the worst performing sector of the year so far. Communications services is actually the best with an 8% gain. Dom Chu has a closer look in today's Sectornomics stop.
And it's about
Said this a million fucking times. I'm literally blue in the face. I don't know why they have to come out and keep saying this. Like, are people retarded? The changes they make will take the whole year, if not 2 years. So they're not going to fucking do any cuts.
One of the reasons why is because there's more of a focus, given the interest rate dynamic right now, some of the stresses in the financial and banking system, on whether or not companies are more leveraged. That is to say, more debt-laden than some of their other peers or even other industry groups. Now,
Instantly told it every single time they talk, they'll maybe put on the market.
That are the most levered in their capital structures to the use of borrowing or debt. Turns out that Charter Communications is one of the highest in the sector at nearly 11 times in terms of overall debt-to-equity ratios. Omicron Group at 1.7, Verizon 1.7, AT&T at 1.4, and Dish Network at 1.2. So more debt than equity on those side of things. But on the flip side, there's a reason why there's a huge focus on the mega cap technology and communication services names. Among the least levered on that debt-to-equity basis, according to YChart's data, Alphabet, really no debt at all in terms of overall equity exposure. Meta, on a relative basis, no debt either. Activision, Blizzard, EA, and T2, video game makers, social media, and internet search among some of the least levered companies. Something to watch out there in that debt dynamic as things shift around, Kelly, with the interest rate picture in America.
Oh, sure. Coming into closer focus, John. Thanks. Let's get to Tyler Matheson now for a CNBC News update. Tyler.
Kelly, thank you very much. And here is your CNBC News update at this hour. A fire broke out on a ferry in the southern Philippines and raged overnight for 8 hours. The blaze killed at least 31 of the approximately 250 passengers and crew on board. Many of the more than 200 people who survived the fire were rescued from it by the Coast Guard, Navy, and local fishermen. According to officials, rescuers are still searching for several missing people who are unaccounted for. Secretary of State Antony Blinken releasing a statement over Russia's widely reported detention of a U.S. journalist who writes for the Wall Street Journal. Evan Gersovich was detained in Russia on alleged spying charges less than 2 days after he co-authored an article titled, "Russia's Economy is Starting to Come Undone." Blinken condemning the Kremlin's actions and also advised any U.S. citizens residing in Russia to depart immediately. And Secretary of Defense Lloyd Austin releasing a statement on last night's Black Hawk helicopter crash in Kentucky that killed 9 service members. Austin says he's working with Army leadership to make sure all troops and their families receive the care they need in the wake of that tragic accident. Kelly, back to you.
Tyler, thank you, and I'll see you soon. Coming up, the triple Qs are up threefold since the S&P since their December lows. Should you chase the breakout in big tech, or will Fed policy outweigh the fundamentals? We'll debate. And throughout the month of March, we're celebrating women's heritage, sharing the stories of women leaders in business and those of our CNBC teammates and contributors. Here is Hallmark Channel CEO Wanya Lucas.
What makes me proud to be a woman is watching other women excel. You never know what you can achieve until you test your limits. I was brought up to believe that if you see it, you can be it. And every time a girl or a young woman sees a woman at the pinnacle of her career, she can believe that her dreams can also come true.
On the SXM app.
And the Houston Astros do it again.
And get expert analysis plus interviews with managers and players on MLB Network Radio.
This is Aaron Boone, manager of the New York Yankees.
Dodgers fans, this is Mookie Betts.
Catch it all on Channel 89 and the SXM app.
This is a special alert to all Americans who own a vehicle with less than 200,000 miles with an auto warranty about to expire or with no warranty coverage at all. Due to a decline in the economy, CarShield is announcing a low-cost month-to-month vehicle protection plan that is now available to the public to save any driver out-of-pocket expenses on future auto repairs. Call now to find out how you can pay almost nothing for covered auto repairs. Yes, you heard that correctly. Pay almost nothing for covered auto repairs. An open phone line has been established for all drivers to call for a free quick quote. Call 800-482-9747 now. Drivers who are covered will not have to pay for covered repairs again. This protection plan is at an all-time low. Additionally, drivers who activate this vehicle protection today will also receive free roadside assistance, free towing, and car rental options at no additional cost. Call us for your free quick quote today. 800-482-9747. That's 800-482-9747. What do you have to lose? Call 800-482-9747. Again, 800-482-9747. Ad paid for by OpenShar Concepts. Attention firefighters, members of the military, and airport workers. For decades, first responders and firefighters at military bases and airports used a chemical-based foam to fight fires. Studies have shown that chemicals used to make aqueous film-forming foam, or AFFF, are highly toxic to humans and have been associated with several types of cancer. If you or someone you know was exposed to AFFF and were diagnosed with any of these cancers, including kidney, bladder, prostate, pancreatic, lymphoma, leukemia, testicular, and neuroendocrine, then you should call us immediately because you may be entitled to significant cash compensation. Call us at 800-408-1687. Our experienced attorneys will fight to get you the compensation you deserve, and you pay nothing unless we get a recovery in your favor. Time is limited to file a claim, so call us now at 800-408-1687. Operators are standing by 24/7, so don't wait. 800-408-1687. That's 800-408-1687. Again, 800-408-1687.
Pop quiz. What inventory does your business have on hand? How much? Where? How fast is it turning? Who's using it? And why? If you can't answer those questions, your supply chain may be in the dark. It's time to get more visibility. Fastenal can help with solutions to locate products, monitor inventory, track assets, and control consumables. Want to find out more? Go to fastenal.com/serious to see how we do it. Fastenal, where industry meets innovation.
Short 50 shares at 27. Close it out to 27.77 and close it out for 50 cents profit swing. 23 now. Something's up. Holy smokes.
Let's welcome in Chris Senek. He's Chief Investment Strategist at Wolf Research, and our very own Michael Santoli. Welcome to both of you. Mike, let's just get, I don't think it'd be semantics, it's metrics or whatever we're going to say. What is the definition of a bull market versus a bear market, and what is this 20% balance technically called?
Well, I would say there isn't one specific prevailing definition of a bull or bear market. It's somewhat in the eye of the beholder. There are some standards. I think that the 20% return
How this isn't like
is an incredibly blunt, one factor, not very
50 cents.
version of what
I think 50 cents is more realistic at this point. Not 40. It's like crashing. 35%, it's got to be done. It's got to be cut. There's no news or statements either. This is what's fucked. And Schwab is almost down 6% now. Like, that is horrendous looking. Doesn't look good at all. So I said, Janet, you know, Intel's coming down. I said, like, markets are coming down on what that guy said.
I think we had the setup for a perfect bear market.
Right up. I mean,
look at the TMT bubble aftermath. You had
they don't want to hear fucking rate increases. That's all they've been saying. Stop pumping the market, and for a literal, like, 3 months, just stop pumping it. Maybe trade sideways, for fuck's sakes. And you won't have to worry about more increases. Increase.
There's been regime changes when fundamentals inflect positively, and we just haven't seen either of those. In fact, I think positioning into early in the year came real negative. If you look at the CFTC NASDAQ futures position, was very negative. The recession that everyone was widely anticipating didn't hit immediately. And then you had the second leg of this rally when you had a banking crisis, and oddly enough, or perversely enough, tech is being viewed as defensive rather than cyclical.
Yeah. I thought it was interesting, Chris, what you said there about how a new bull market requires new leadership. And Mike, obviously, we don't have new leadership. We have the prevailing leadership of the past decade. Would you also say that we have to make higher highs or new highs in order to say that we're on kind of a new bull trend, Mike?
Look, I think you could argue that, but if that were the case, then we
Still
were in a
falling.
bull market from 2009
Holy
to
shit.
2013. Okay, we didn't make a new all-time high over that entire period of time. And some people will tell you, yeah, it sort of has to be tested, and then you retro date the start of the bull market if you want to do that. So I think that, you know, the question really for me is, the NASDAQ 100 certainly could eventually prove itself to have been in a new bull market. I think it's more interesting to discuss, do the October lows look like they're going to be important? Are they going to be consequential? Are they going to be durable? And how much could you fall before you bring those that back into sight? And to me, that's where we are right now. It's not so much we're going to make an attack on the all-time highs. It's have we established a new range? And I agree with Chris, the positioning got very negative. It's happened multiple times coming into the year. But that also means that people had over-anticipated bad things, whether it was an imminent recession or whether it was the Fed going to become more hawkish than expected. So the downside that we got to because of the negative positioning was also an overshoot in the short term.
And would you agree with that, Chris? And where does that then leave us set up for the next quarter?
I think the big change in factors was Fed liquidity. And we found a very strong correlation between the Fed balance sheet reserves that they have and report each weekly. We'll get the update after the close today, and the NASDAQ. And I think there was a turn in Fed liquidity in the beginning of the year, and certainly that accelerated in the last couple of weeks, and that's put an upward bid on the NASDAQ. And so I think it's been all about the Fed, and you throw in these technical trading ranges and relative strength and highs and lows, and that matters too in positioning. But to me, the biggest turn and the reason the NASDAQ has performed as well as it hasn't been EPS revisions. In fact, other than Meta and a few semis, EPS revisions from the start of the year have been down, not up. It's what's up between, now and beginning of the year, Fed liquidity, and that's and expectations that the Fed may cut in the back half of the year, and that's what's driven the NASDAQ.
That said, Chris, why aren't you more bullish? Because again, you say you're still bearish, see a relatively deep recession ahead as these Fed cuts hit. But if the liquidity underpinning is now turning, why are you not more bullish on that support kind of being something that stocks can ride higher?
So we're in a strange environment. The Fed's hiking and sort of cutting at the same time in a way, right? With adding liquidity and doing the opposite. And so our view is that what happened over the last couple of weeks is a seismic event. Bank credit is going to tighten. Companies are going to be under pressure. Tech spending is going to get cut. And in the end, tech is cyclical. And we're going to find that out over the next couple of quarters when all of a sudden companies start coming on your show and coming out with earnings release and saying things just abruptly stalled. And we have higher conviction in that now than we did even at the beginning of the year, because credit is the lifeblood of the economy. And we're unwinding what I think is a 13-year zero interest rate tech spending bubble. So that's why we're cautious.
Very interesting. Mike, I was just going to give you a quick last word.
Yeah, I mean, I'm a little bit less focused on the kind of step-for-step move in liquidity as defined by what's going on in the Fed balance sheet and the overall market. The other thing to keep in mind is it sounds so right to say we were in a 13-year zero interest rate.
Sounds like they expect this to go to zero.
We actually had a tightening cycle in there. It was very stunted, but it got real interest rates up to about where they are right now in 2018, and the market did have a panic off of that. So I don't think it's been necessarily like some spigot that's been wide open since 2008, and we just closed it, and now we don't know what happens next.
All right, Michael Santoli, Chris Senek. Good stuff, guys. Thank you both. Appreciate it.
Thank you.
Coming up, China has reopened. The supply chain snarls are supposedly fixed, but the transports are now facing another round of headwinds, and this time the Fed is partially to blame. We'll get a check on the state of freight. I always want to say fright. Maybe it is a fright. That's next.
Ad paid for by the tax resolvers. COVID-19 was tough on businesses. If you experienced a negative impact to your business during the pandemic, then you need to pay attention. There are some new powerful incentives that have been created specifically for businesses impacted by COVID-19. One such program is the Employee Retention Credit. Its tax incentive could bring you some serious cash back to your business. Even if you received a PPP loan in 2020 or 2021, you were still permitted to receive this credit. There are many ways to be eligible, and taking advantage of this tax credit doesn't need to be complicated. We made it easy for you by doing the legwork to maximize the amount of your refund due. Call us today at 800-619-0655, and we'll set your business up to take full advantage of the Employee Retention Tax Credit. That's 800-619-0655. Again, 800-619-0655. We'll get the ball rolling on getting you and your business some much-needed relief, but time is limited to file a claim. So call 800-619-0655.
IRS troubles were nasty.
I had 10 years of unpaid.
Oh, look up increase with banking stress.
I started getting
yeah.
And unbelievably
unbelievably complex.
Things that are written in the tax code are so complicated that if you don't pay a tax professional to do your taxes, you're going to screw up. This was such a complex problem, I did not think anybody could solve it.
Eric's whole life was about to go down the drain, so he called Optima Tax Relief.
Optima was able to make sense out of a huge disaster, and Optima stopped it.
To say the least, Eric was very relieved.
They got me out of hot water.
Slaughtered.
Optima saved me a bunch of money.
Schwab,
They got me out of a
low
totally complex situation.
like
Huge
Boston
relief
low,
and a huge
16
weight
cents.
off my shoulders.
Got a nasty, confusing tax problem? Do what Eric did and call Optima right now for a free consultation. Call 800-901-3022. 800-901-3022. 800-901-3022.
Optima Tax Relief.
Testimonial from an actual client. Some restrictions apply. For complete details, please visit OptimaTaxRelief.com.
And paid for by James Ryder Interactive.
Attention. This is an important message for anyone that has been diagnosed with cancer after using such products as Johnson & Johnson baby powder and shower to shower. Recent media studies have shown that use of talcum powder can cause ovarian cancer. If you or a loved one has been diagnosed with ovarian cancer after using these products, then you may be entitled to significant compensation. In July 2018, a jury awarded $4.7 billion to 22 women whose ovarian cancer was linked to Johnson & Johnson's talcum-based products. Don't wait another day to see if you're eligible. Call us at 800-726-2809. That's 800-726-2809. Our network of attorneys are
Single
ready to
tax
fight for
dollar
you,
sent to
and
you,
you'll pay nothing unless there is a recovery in your favor. Time restrictions may apply. So call now, 800-726-2809. That's 800-726-2809. Again, 800-726-2809.
I don't usually buy high-cost options, but yeah.
Rates are the big headwind facing the freight industry. Frank Holland has been speaking with multiple executives, and he joins me now with what they are saying.
I was trying to sell puts for $250. Because look at the volume on the chain. It's all way low. You know, you got at the money is like $22.50 now. It was $25. Totally. And then all the volume pretty much is way at the bottom though. So something's up. This is a month out. So I don't know. A month is a long time too. So currently I would prefer weeklies is what I would prefer. And that's the problem with that one is it is monthly. So I mean, the markets are bleeding now, though, after what he said. Like, look at the SPY. SPY's falling off a cliff, 36 RSI. And then same with the Dow. It is a troubled bank. It is a troubled bank. Yeah, it was 37 bucks. It was like it was 100 and something bucks. Like, it's... But I'm thinking it's like FRC, you know, maybe the low is 14, maybe the low is 0, like SBNY. How the hell should I know? I don't know. If it was weeklies like FRC or any of the other banks, that would be a lot more practical. But it's not.
What should now be the whole sector emerging from all of these issues strongly, they're emerging from it and facing potentially a demand downturn, a recession, let's call it. Is that the gist of it?
Oh.
You know, that is certainly part of the gist of it. I mean, volumes have just definitely declined. Number one, people are spending less money. You got to remember, during the pandemic, we were just buying things and even stocking up on things. Also, we're buying more things online. E-commerce requires much more warehousing space and obviously just more inventory. And then there's also the big macro trend of nearshoring here in North America. A lot of companies are just readjusting their supply chains. So while they're in that process, they're having less inventory and just making fewer decisions right now, and they're trying to position themselves long term.
All right, Frank, thank you. Frank
Sense that, okay, if it goes up $10, you lose $10 a share. You know, when you got 100 shares, you lose $100, $1,000. Goes down $10, you got 100 shares short, you make $1,000. So, puts you could just lose it all though, because these are really like the value of these is insane right now, right? It's,
the politicians
you know,
press are always worried about.
I was selling these for 40 cents earlier. Now they're back to 30 cents, and the stock's fallen, which that's not how options work. So I don't know what's up with that.
Early last year,
but they're still 2.5 times what they
4
were
is
at the bottom
$1,000.
of the COVID quarantines, and they're still higher than they've ever been any time in history pre-COVID. When I look at spot pricing, yes, spot pricing is down over 30% from the peak it hit
That's the thing, though,
at the halcyon days
man.
early 2022. But they remain higher than any pre-COVID
On
levels
SBNY.
in contract.
The stock got suspended and then the puts expired. That's why I'm saying shares. So that's why I'm thinking if I sell puts and it gets suspended, okay, fucking I'm free money. So I mean, you could sell a 10 and get a bunch of free money, but that's still risky as shit, right? You could sell a 5 and get free money. Risky as shit because it had to be suspended for a month, and SBNY wasn't suspended for a month. It was suspended for like a week and a half, 2 weeks. SI wasn't even suspended at all. So now it's like you're playing on, hey, will we get a suspension? Not even a fucking AMC 492. What a piece of shit. I don't want to watch that fucking garbage. AMC. So fucking sick of that stock.
It's going to replace Russia as Europe's energy provider, and in doing so, it's going to drive ever larger incremental volumes in that industry.
Yeah, and it's interesting that actually international freight flows have been weaker than domestic ones. Why is that? What does that tell you?
Well, there's a couple of things going on here. First of all, in 2021 and 2022, container prices they were ridiculous. They were sky high. Container themselves were in short supply, and transit times were unreliable. So that's been addressed. We've built capacity. Containers have become available. Prices have returned to normal. And just as that was happening, the Chinese started shutting down entire cities.
It's a bit of a miss on my part. I mean, I've been talking about it all day, and I did not act. I could have taken my account from. I could have added 150 grand onto the account today, just playing the downside on Schwab. So.
Russia's invasion of Ukraine has made things even more complicated. It's made it more complicated because first it required the air freight industry to divert flights. FedEx might have over 700 planes, but a 777 Boeing jet's worth over $200 million. Nobody wants to fly such a valuable asset anywhere near a war zone. It also has thrown ocean shipping lanes completely out of balance.
Trying to stick to my strategy of the safer way to invest here, but when you see this, it's very hard. Very hard to tell yourself, why would you do that when now might be the time where you can make some big money shorting these fucking things. But if I swear, it just feels like every time I enter lately in just a pure option play, I don't do covered, I'm getting wrecked. I don't know. Like, look at AMC. I got destroyed. I paid 20 cents and I closed for 3. That's a 95% loss. So, I mean, I don't know. I go into CCL. The thing skyrockets. I'm fine with that because my intention was long, but I could have gotten way more literally 2 days later. 2 days later, I could have gotten it. So it's like, options have not been friendly to me, but that's not, just because that's how I don't want to play it doesn't mean in the Discord other people can't benefit from that, There's different risk tolerances, let's put it that way. And right now, my tolerance is I don't want to lose any money. I'd rather make 2% than lose anything. 2%, sure, 800% would be, life-changing overnight, but I couldn't even risk what I have to make that anyway. It's not in my view.
This is a
fuck is the gains thing? Gains. Ah, there we go. Couldn't find a picture.
Miles with an auto warranty about to expire.
that would have been.
Due to a decline in the economy, CarShield is announcing a low-cost month-to-month vehicle protection plan that is now available to the public to save any driver.
They'll bleed tomorrow on those comments for all I know.
Call now to find out how you can pay
no one's gonna like those comments.
Yes, you heard that correctly. Pay almost nothing for covered auto repairs.
Higher rates means it's harder for banks to make money because banks make money lending money. If people can't afford higher rates, the banks can't make the money because they can't lend the money.
Drivers who are covered will not have to pay for covered repairs again. This protection plan is at an all-time low. Additionally, drivers who activate this vehicle protection today will also receive free roadside assistance, free towing, and car rental options at no additional cost. Call us for your free quick quote today. 800-482-9747. That's 800-482-9747. What do you have to lose? Call 800-482-9747. Again, 800-482-9747.
Modern cyber attacks are a matter of when, not if.
$7 grand. $5 grand, you got $35,000. $35 grand. It doesn't look strong at all. It looks weak. It looks like it wants to test 51 and change. But I mean, that ceiling is like 80. So I mean, the regionals were supposed to be the ones that are going down, not the Wells Fargos, not the Bank of Americas, not the Schwabs. So even that, I don't know what the hell's going on with that. The big banks are supposed to be the beneficiaries of all of these situations. They're not supposed to be going down with them. That doesn't make sense at all. The money's got to be fucking somewhere. Can't have what? Every bank goes to zero. No bank is going to exist, and now all the money is wiped out. And then that would affect the billionaires too. So it's not like they want to see it either, right?
Radio's golden age is alive every day.
The theater of the mind.
On Sirius XM Radio Classics.
Isn't this sensational?
Radio Classics on channel 148 and anywhere you listen on the SXM app.
Welcome back. We've got some news on the banks out of Washington, D.C. Kayla Tausche at the White House, it looks like, with the story, Kayla.
Kelly, the Biden administration is proposing some stricter bank rules that it says would prevent future collapses like Silicon Valley Bank and Signature Bank. First and foremost, the administration is proposing the reinstatement of some of the original provisions of the Dodd-Frank law that would apply to banks between $100 and $250 billion in assets. The White House says these banks should keep more liquidity on hand, have more frequent stress tests annually instead of periodically. They should also have living wills or these resolution plans that help them be wound down more easily. And they should also have a shorter transition period to actually come into compliance with those rules. That's currently 3 years for banks over $100 billion in assets. They say it should be much shorter. They're also proposing some new regulations for these banks. They say stress tests should be assessing scenarios like a rising interest rate environment and what happens when you suffer severe deposit outflows. Those have not been tested in the scenarios that the Federal Reserve have put together. They also suggest that banks keep more long-term debt on hand as a bigger capital buffer in the case of something like we saw in recent weeks. And finally, they say that the FDIC should be raising the fees on big banks to fund the deposit insurance fund, which has been depleted to backstop the deposits and the depositors
on the banks.
Silicon Valley Bank and
Raise
other banks. Now, notably,
banks.
The administration says that no changes to legislation
On the big banks, guys. That's what I just heard. What a fucking scam. To protect you. To protect you from their bad investment decisions. Raise the fees. Fuck you.
And say that they believe that they support a lot of these actions. But Kelly, you'll notice that that list did not include an increase in the deposit insurance threshold above $250,000. I asked a White House official whether that means that the administration doesn't believe that that threshold needs to be raised and that it won't call on Congress to do that. And a White House official told me that the FDIC will be putting out a report on that by May 1st. They're going to leave it to regulators to decide how to proceed there, and then they'll go from there. Kelly?
Absolutely the most important point here. Kayla, thank you, as we're showing again some pressure across the banks on that news. Speaking of which, let's turn to Steve Leisman, also in D.C. There's been a flurry of Fed headlines. Steve, bring them to us.
Yeah,
So we have 3 Fed speakers speaking right now on interest rates,
and
on
then
inflation,
have any
and of
risk.
course on
All
the
the
banking
risk is on the
turmoil.
person who's
Susan
lending.
Collins from Barclays was speaking right here at the NABE meeting, saying it's too soon to
You'd be
say what
paying
the
us
FOMC
to
should
borrow
do at
our
the next
money.
meeting. She says banks are likely to take a more conservative outlook on lending. That's likely to impact financial conditions and could play a role in policy making. Additional bank stresses, she says, could influence policy thinking. Neil Kashkari, Minneapolis Fed president, says we have to bring inflation down. He says the vast majority of banks have taken interest rate risk seriously. He sees the financial system as sound. It's unclear, he says, how much banking stress will lead to a sustained
Fucked the settings up yesterday.
crunch, but it could last longer than people expect. And finally, Thomas Barkin from Richmond Fed saying he's comfortable with this idea of going meeting by meeting.
You can see me in the Discord. I'm gonna have to fuck with these settings later if it's going in and out. I gotta figure it out. It's got to do with the. It's got to do with the.
Additional policy tightening will be needed. So she's on board with raising rates, just perhaps not necessarily at the next meeting. And then Barkin saying policy will need to be nimble. If inflation persists, we can react by raising rates further.
So it's suppressing the fan noise, but there's what do you call it? I mean, I can try one thing here.
What's happened to the probabilities of a rate hike in May? And you can see it's
I can try noise. And if I turn the noise gate off, you're gonna hear like a shitload of keyboard noise when I'm typing. So that's fine. I'm just gonna log off. You know, there's 2 hours left. 30 people in the live, so I've been live a couple hours. I'm pretty sure you're all, what'd you call it, Discord members anyways, so I'll see you guys in there.
Neil Kashkari, in a new article for the Wall Street Journal, Greg Ip says that